Hey guys, it is that time again, Data Center Monthly. And if you're thinking this is a little earlier than expected, you are right. We moved it up by a week because it feels like we've had 3 months of news. Of course, I
Yes.
am joined here, and somehow I don't have our names below, by Nate the Great, my co host, and also by Jose. And Jose, remind me of what the chip is that what you,
Yeah, what the
yeah.
chip happened.
With the chip.
What the chip happened. I'll make sure to post their tags, so be sure to follow these guys. They're absolutely great. Today we're going to be talking about, of course, CoreWeave, Nebius, and IREN, and we're going to be talking about also a little known data center play towards the end. You guys might have heard about it, but it's called SpaceX. But we'll get into that. A lot of macro stuff. We have pauses in Texas. We have shorts from Michael Burry and Martin Shkreli. We have bond fears. We have big 500 billion and 250 billion packages. We have the hyperscalers that reported earnings. We have, of course, IREN, a lot of IREN news as well. For each of these, we'll talk about some of the news that's happened over the last 3 weeks, as well as the earnings results for the two that have already gone, and earnings expectations as well. First, Jose, let's start with you. Since you're our guest here, thank you for being with us today. Could you tell us, out of these three, I already know, but just for our audience, what you're invested in? If there's like a concentration amount that you've shared, and if you haven't, that's totally fine. And then why the ones that you pick? Why data centers?
Yeah. So first, thank you for inviting me. I mean, this is awesome. A monthly episode, a monthly show about data centers. What the best thing ever. Best thing
What more
ever.
do you want? Yeah, exactly.
What more do you want? Like you mentioned it, in just 3 weeks, so much has happened. Now the data center plays top level. I'm very bullish in just the whole AI and semiconductor and data center industry. Main reason is I truly believe AI is that technology that's going to completely revolutionize so many different industries, right? We have kind of just initially, we're getting this software movement. You have the agentic trade, and then you have other avenues that are picking up into this AI story, and even the software and AI agents of tool columns. Like, that's still very, very much, very early where we're at right now. So even with any form of optimization that happens with LLMs, with chips, or with software solutions, I believe those optimizations are not going to be enough to outweigh the demand of tokens that are going to be coming through demand in the next few years. So that's my top level of why I'm very bullish in the neo cloud space, because these are the infrastructure players that are going to be able to serve some of those markets. And more importantly, because of the limitations of power of chips, there's going to be a limited amount of, I wouldn't say competition, but it protects the chances of an oversupply build, because you can't get enough chips, you can't get enough memory, you can't get enough of this and that protects this cycle, in my opinion, a little bit longer. Now, for the one that I mainly invest, and this is, I don't think I've ever broken down on exposure, and sometimes I don't even look at my exposure size, but it's over 10% of my overall portfolio, probably a lot higher, but it's definitely over 10%. It is my largest cost basis position ever. And that is CoreWeave, right? CoreWeave is the number one that I enjoy.
Right on.
That's Nate the Great. And Nate the Great said, the only way I can show up to this episode is I have to call him Nate the Great. So chat, you guys have to you guys have to be easy on me, because that's the only way I can show up here. But CoreWeave is my favorite play. That doesn't mean I hate any play. It's just, it was the one I decided to go the most. Initially, my main reason for this is, when I first started investing in the neo cloud market, there was one player, that Jensen and Nvidia, and that's where most of my investment usually comes from Nvidia. That was kind of like my big win. CoreWeave and Nvidia had a partnership that I didn't see with other neo cloud players at that time. Maybe it has shifted a little bit, but at that time, there was this, every time Nvidia would release a new product, a new CPU, one of the first players you would see on that list was CoreWeave. And that goes a long way when the godfather of AI is right at your side. The other thing that I really enjoyed about CoreWeave was just the massive scale that it was building out. And I understood the risk of kind of that crazy debt it was building, but I believe a lot of that debt would be paid out. And I would say, if there was a third reason, is, while it doesn't have kind of a full software stack as some of the other players out there with higher margin topics, it did focus pretty much on the AI industry. And we hear a lot about it, that a GPU in one cloud isn't the same as another GPU in another cloud. The utilizations and some of the other terms that we see about CoreWeave was always performing on the better end. And that allowed you to kind of guaranteed a form of premium compared to neocloud players or some other players. So if there were three reasons, it would be that for why CoreWeave became one of my core positions in my overall portfolio.
All right, that's awesome. And how long have you been in these plays?
CoreWeave has been one that I went into the IPO process. I think in the IPO it crashed down to like 40s or so. And I kind of took that right up to 180. I am a long-term investor. Sometimes when I see, hey, something 3x, 4x for me, I did sell out most of my position on the way up. And then I restarted rebuilding my positions. I forget when, earlier this year. No, I remember November of last year, or November or December of last year, we started to see this crash again in the neocloud space. So I started to get CoreWeave again, like in the sub 100s, in the 90s. That's when I restarted my position, and then I continued to add through this kind of downfall that we had here in the past few months. Anytime the stock would go below that $90 price point is when I would start to get more aggressive. So typically it's not like that, but if I get a 4-bagger in a few months, which I kind of did with CoreWeave, I'm like, hey, I don't mind taking it, especially since the rest of my portfolio is also very high beta in AI growth stories. So it's like, if one of you wants to give me a crazy return, I'll gladly take it and that. But one of the reasons I was able to sell out on some of those during there.
All right, so you're a sellout, is what I. No, I'm just kidding.
Yeah.
All right, so we're going to look at price action here in just 1 second. Then let's talk CoreWeave, some of the news, and then the earnings, and we'll go into Nebius. And then we're going to lean heavy on you, Jose, because you're the one of us, I believe only one of us, unless something's changed, Nate, that holds IREN. Is that correct?
I would never. No, I'm just kidding.
Are you still in, by the way, Nate? So I know you bought some, I think, leap options on CoreWeave. Are you still in those, or did you take profit?
I didn't have leap options. No, I did not. I wish I did on CoreWeave. I should have, because at $60 a share, it was a steal. But Nebius is also at 140, so I'm just like, gotta pick your poison.
And for the record, I added Nebius, so it is now in my portfolio. I have a whole share.
Yeah,
so
I was gonna say, you for half a second, I was like, did he really? And then I remember we made you buy a share before you could come on earnings. So
it was an easy ask. I'm like, it's a great company, it's an attractive price. I mean, I don't, but yeah, you can only own so many things. So
I wouldn't hate you if you sold. By the way, it's up 40% since you bought it, probably. So
yeah, it's a share. I'm not too worried about it. Like the next time CoreWeave falls to $60, then I'll sell everything, including my other kidney. I don't need that too. And then Nebius share will come right before that. So okay, so here is, since we always go over the price action over that whatever time frame we're doing. I don't have the 3 weeks out, or I don't have the ability to do that on here, but this is over the last month, and I'll show weeks as well. Really good month for all three of these. CoreWeave, just because it was so depressed prior to and during this, it's up 27%. Nebius is up 21%. IREN is up 14%. Over the last 5 trading days, 30% for Nebius. I mean, we could have just taken yesterday and it would have been over that, which is just crazy. 22% for CoreWeave, 16% for IREN. And then just as a reminder, year to date, Nebius is just absolutely crushing, up 183.5%. CoreWeave is now up 33.9%. IREN's the laggard here, but they are reporting earnings, and they had some really good news, which we'll for sure touch on, that just came out today. Confirmation that things are going very, very well there as well. Now, as far as CoreWeave, let me fix this here. A lot of news related to this. So I guess let's start news first, and then Nate and Jose as well. If there's things that you want to, we'll take maybe just like one or two items at a time. I didn't pick everything up because I want the main focus to kind of be on earnings, but I think that there are a couple of interesting pieces here. So I'll just share some of these. And so one of those is, we saw the second quant firm partner with CoreWeave. I did see, by the way, when we'll talk about Nebius partnering with one as well, and maybe you have an idea who that is, Nate. But they have, of course, Jane Street, who has that $1 billion contract with CoreWeave, and then we have Flow Traders as well. So that seems like one of those. They have a very diversified client base, and I'm loving to see that, especially on the quant side. You guys have any comments or any thoughts on this overall, or we can go to the next one too.
No, I just think it's great. They're expanding enterprise customers. I think, yeah, that's really it.
Okay, that's the A100. I was going to say that for the earnings call itself, and that's macro. Okay, so this I thought was one of those interesting pieces right before the earnings, and we'll talk about, of course, this leg of the business for CoreWeave and the earnings results. But they signed a multi-year agreement with Solidigm. They are a subsidiary of SK Hynix, and so they, of course, are providing the actual storage. It's one of those critical resources. It is a part of the business at CoreWeave as well. And so I like to see this offering. Jose, I'd seen you, but we hadn't interacted prior to this time. Any thoughts on the Solidigm partnership? Does this strengthen the thesis? I know that they have it in the title, but does this shift or move anything for you, or is it just another checkbox?
I think kind of like what Nate was saying, it's good to, with the prior news, it's good to just see kind of more companies outside of, because CoreWeave was heavily focused on kind of those big players, right? Your Microsoft, their OpenAI, they announced a partnership with Meta and Anthropic. Like, it's usually been the big players. Now, during the earnings call, they also mentioned they really want to kind of expand a little bit into the enterprise market as well, into different types of contract terms as well. So more of like, yes, you're hitting that mark, check mark. And I think we also saw during the earnings call, and probably we'll talk about earnings, they also talked about things like life science becoming a growth opportunity for them. I believe cybersecurity is going to be big as well in this industry. So it's more of like check the box that the market continues to move, and the more sectors that are in this space, the more that demand for tokens is going to continue to increase.
Yeah, and it's interesting because I'm basically seeing Nebius and CoreWeave strategy converge slowly over time. And we'll talk about earnings, but obviously it's hearing CoreWeave talk about their inference platform, life sciences, where Nebius has been talking about life sciences for a while, has an inference platform. And I just think they're basically just slowly meeting to the middle of where the demand is and where they're going to make the most money. And it's just like, it's interesting how they're both slowly just like announcing similar things as they both grow. So I think it's cool to see. I would like Nebius to do something similar when it comes to memory. I think that's probably, I wouldn't, maybe not a bear case, but definitely would eat into the cost when it comes to memory, and just probably getting better deals longer term with memory and just things like that. So I do think I would like to see Nebius attempt to do that as well, as they're trying to, 75% of their gigawatt capacity they want to own. That's even more expensive than co-location. So I'd hope they want to go that route as well. And I'm curious to see if they will over the next couple of quarters, honestly.
Yeah, and like these type of partnerships, it's one of those things that I think that CoreWeave has absolutely excelled at. I won't say that they excel at every single thing, but the supply chain logistics and wrapping up these partnerships and making sure that they have an understanding, of course, what the market is wanting. So they're not just waiting on certain things, that they have most of their facility built and they're paying interest on the debt. Instead, I think except for one site, and again, they have 51 data centers now, they just continue to ship data centers on time and deliver to customers. So it's pretty awesome. Another partnership that was announced this last time as well was with Leidos. This was, of course, on top of their CoreWeave federal deployment. And it's one of those things where CoreWeave is, of course, an American company based in the United States. They have been expanding internationally in Indonesia, which I don't think I put that up here. 360 megawatt facility was announced over there. And I'll talk about in the earnings results what breakdown of those megawatts and gigawatts, actually, it's 1 gigawatt, is international. But it seems like that they're positioned very well for this. Like, obviously, the federal government is not going to lean hard onto some product that's over in China. But even when it comes to companies like Nebius, which is a great company, they're based in Amsterdam. So I feel like that this is one of those unique niches as far as the scale, the size that they have, and then where they're deployed the most that they'll benefit from. So any thoughts from you guys as far as just continued execution on the CoreWeave Federal and this Leidos partnership?
The only thing is very top level. I do believe AI is going to be a crucial role in national security. So to me, one of that kind of like you were mentioning, Roy, one of those bullish theses for me is having that asset here in the United States, and a lot of it allows the opportunity, because it might sound crazy, but at the same time not crazy, where is it impossible to have just data centers focused on having cybersecurity agents defending certain portions of national security, protecting from other nations attacking. So having that infrastructure here, I think is important. Honestly, I don't know. I don't want to consider it risky, that international exposure that they're building. I think obviously they need to have other markets, but eventually, if data centers do become a national security risk, I am curious of risk of news coming out that, oh, is this data center going to be a potential, and I don't want to be a doom, but like potential target due to certain reasons. So for me, I feel more safe with a lot of data centers being built here opposed to somewhere else due to some potential volatility that may come from news or scare tactics with things like that.
Yeah, that's something I actually hadn't thought of before, but we saw some of the strikes from the Shahed drones and the missiles from Iran, like hitting AWS data centers. It's like, that's, they don't have one over there, that area, but it is one of those things to kind of keep in the back of the mind. So yeah, good point there. The last item here, and Jose, if there's other things that you notice over the last few weeks that you're like, hey, this is awesome for CoreWeave. I'm not including everything, and there may be some things I missed because there was a lot that happened. CoreWeave got a new social media guy. Well, I don't know about that really, but that it was kind of fun just to see the way that they've been posting about things, because at the time when this was posted, CoreWeave was just tanking down left and right. But yeah, of course, I think it was the day of when we did this. I don't know if we covered this, but of course, there's the first to have the Vera Rubin NVL72s up and running. And then rather than just leaning on white paper, here was the actual results. Nvidia retweeted it as well, 10 times more tokens per megawatt. All of these businesses have all of these models have something that they absolutely excel at. This is one of those where they said, hey, we're the tall ball here for output speed, Minimax M3. So any other news, Jose or Nate as well, for that matter, relative to CoreWeave, and then we'll get right into that earnings report and then jump into Nebius.
Not that I have, yeah. I think what we might have heard from earnings, but outside, I haven't really seen. Oh wow, this is extremely something we can discuss.
Yeah, earnings is a big one, and we got to talk earnings. So a lot of firsts. I guess first, Jose, before we get into like the actual results and some of the things that we loved on it, if there's any concerns as well or things that we'd like to see next time. Did you end up? You mentioned before that you've trimmed into strength, and then you bought into weakness, and you're obviously a very good investor. Any change for you as far as your positioning or thinking of CoreWeave overall from the earnings results?
Definitely not. Just more, bullish sentiment. I think even if we go to all-time highs that we've seen, I definitely wouldn't trim out of CoreWeave. Is a completely different company than it was just a year ago. Just the massive scale is enough to allow me to, even if we get those all-time highs, not really move the needle. So I feel very confident that at least for now, I completely believe it's extremely undervalued. And even if it multi-bags from here, I'll be very happy open.
Yeah, I did sell just a few shares just because I had like zero cash. I scraped the bottom of the barrel for it, but it was a very small. My waiting for CoreWeave exceeded 20%, and so I think I trimmed like 3% of my position, not 3% of the 23%, like bring it down to 20, but it was a small amount. I'm like, let me just shave it a little bit, get a few $1,000. But regardless, with the actual results for CoreWeave, there was a lot that was. I felt that like they handled the call overall like very well. There was a few things that I think Nebius did that we'll talk about during the Nebius time, which I'd love for them to comment on. I don't know if they would, but I think the most exciting thing for me was specific to CoreWeave, but not really specific. One of those myths that's been out there for a while is that the neoclouds and the hyperscalers are just doing accounting tricks with depreciation cycles, extending them further out. Of course, we'll talk about the short arguments from Burry. Shkreli is a little bit different argument there. And there's been a lot of reads. This is not the first read that's saying like, hey, that's completely wrong. But initially it was when that started coming out, Jensen Huang immediately commented. This was like 6 months ago. And now we've had company after company that is basically saying, hey, Hopper levels, we continue to sell them at higher levels, not just Nvidia products, by the way. But this I felt was like the most amazing point. So A100s they mentioned, which these Ampheres were from 2020, so maybe summer or something they bought them. So 6 years ago doesn't sound like a long time, but for GPUs, that is ancient technology. That is just something that usually, like prior to this cycle, you'd be like, yeah, depreciation cycle. They fully depreciated. They have very minimal value at that point. Instead, they announced that they signed a 3-year contract with the company for a nice rate of return. They talked about it on CNBC a little bit later, and it sounds like that it wasn't a contract that they signed because they're like, hey, we're going to sell it at 10% of the amount that we did before. It may not be the exact what they were getting at 2020, but it was something that they're getting a very similar return to as they did originally. And so when people are crying foul about a 5-year depreciation cycle, you can point to them and say, hey, there's a 9-year life at least for these A100s, and it wouldn't surprise me if you get to the other side. Probably a lower contract by that point on these Amphirs, but they're not going to be without value even after 9 years. They're fully paid off. And that was like the moment in the earnings call. I remember distinctly, Jose, you were pumping your fist. So I guess, Jose, like, why is that? Like, why were you so excited about that moment? And then Nate, what are you thinking relative to? I know you were listening to the earnings call in that moment.
I'll let Jose take it.
Yeah, so I was super excited. I mean, just because first, not just CoreWeave specific, but just for the rest of the market. These companies, these neocloud players, pretty much have made the deals that, especially with these long-term contracts, they are already profitable and make money. Like if the CFO even mentioned, after our long-term contracts with whatever we've built out, we've made our money. Like we've made our money. So anything after that is a massive accredited to margins. So the first thing is like, all right, you've had this model when you first built these data centers. And when CoreWeave really started building these data centers, there wasn't this crazy GPU pricing. So when they were doing a lot of these modeling, they modeled where that GPU pricing would go down over time. And then after time, it would get to some level. And if they were able to recontract it, that was great, but they weren't banking on it. They were not banking on it. They were just, once our 5 years done, we've made great free cash flow on this business. But now you're telling me that they modeled for data center GPU pricing to go like this, and what they're actually getting is maybe something like this. That gets me super excited for not just CoreWeave, but the rest of the industry as well. The other thing is, and maybe we'll talk about this with the macro news, but it showcases that right now a GPU is a different type of asset. For example, when a lot of these older players started to build these neoclouds, financial markets would put a lot of risk on GPUs. They wouldn't give a value to the GPU itself. They would say, they would have that same model. Oh, by year 3, if we have to take that GPU, we're most likely going to have to sell it at the pennies to the dollars or the dimes to the dollars. But now that a company can show the data point, our GPU, our pricing, our value stays the same after a certain time, and you're only giving me a loan for 5 years. Now the bank can say, I actually have a lower risk here, because if for some reason this neocloud player can't pay me, I can take that GPU and now probably sell it at $1 to the dollar or 90 cents to the dollar. So my risk as a lender has decreased dramatically, and now I can give a better rating to that neocloud player. So it was happy for those two instances, because one, give you better margins after the 5-year contract than originally modeled, and more importantly, it showcases to the banking world that these GPUs should be priced at a different type of asset value. And that's exactly what Jensen will talk about in a bit, and gives the opportunity to get way better financing, not just for CoreWeave, but the rest of the industry as well.
Yeah,
Go ahead.
Go ahead. I was going to say, I thought even just the trend for earnings itself, where I feel like all of these AI executives are doing a better job of just, in simple, plain language, the ROI of CapEx. We saw the same thing with Jassy. He went on and basically just kind of spewed on and exactly talked about, after 3 or 4 years of servers and networking, we're just making straight money. Then you see CoreWeave come on and say, hey, we're selling A100s for 2029. You see Nebius come on and say, hey, our payback period. Like, I think they all have this trend of this wake-up call of like, all right, we clearly have to spell it out for these investors because they don't get it. And so let's go on as, these CEOs and just in plain language explain it. And so I was super pumped listening to CoreWeave because it was the night before Nebius, and them talking about, we're selling A100s for 2029. And I use the example of like, it's like, imagine buying an iPhone 9 now and saying you have to use it for another 3 years. Like, and in the leaps in GPUs are even more than that. But it's just contextually as like a human, like having to buy that old technology. and the fact CoreWeave found even some value in it. Who knows how much value? And I don't think it would stop at 2029. I think 2030, 2031, it'll still have some value too. And so it shows exactly that, like, these things could last 10 years versus the 2 or 3 years the market was thinking. And that's why you saw these massive earnings bumps and re-ratings. And so I was super pumped about it too, because I was like, I just loved the CoreWeave CEO just kind of came out in plain language and just said, explained it verbatim of how what they're doing is a profitable business, even though we understand. And so I thought that was great. I think it's changing the narrative, especially for a what people call debt weave. I think people don't like CoreWeave because of debt. This is showing them, hey, we're adding all this debt, but we're actually going to make a crap load of money on top of it and be able to pay it back.
I'll give a new nickname, CoreWeave. That's what I was about to start calling it if it kept going under 60. So go ahead, Jose.
I was going to say, I think the biggest extension of how GPUs, how much these GPUs are going to live for is more just the actual life of the hardware itself, right? I don't think we've ever had a GPU be active for 10 years. So I don't think, I think for the A100, it's not going to be that the demand is going to die down. I just don't believe we have enough data that what happens to the reliability of that hardware after 10 years. And if I was going to be a bear, and let's say 3-4 years from now, we start to hear CoreWeave say, oh, we no longer are recontracting the A100s, many bears are going to go and say, look, it's because these GPUs are dying, are no longer a reusable asset or anything like that, when the real reason is 10 years on these GPUs. I don't know if there's a timeline that Nvidia has given us, but that's the thing, is when do they die more of just the hard work that they've been putting on?
Yeah. And I think BCAP put it in the comments saying these GPUs are super affordable on a per unit basis for smaller workloads for RG, running under 30 billion parameter models that cover most non-coding agentic use cases. So I don't know. And I know BCAP, we've talked before, he's an engineer and he works in enterprise space, and they still use 2018 GPUs from Nvidia. So that's already about to be 10 years. But these are for simpler use cases. So
yeah, I thought that that Intranter did a really good job of talking about that the premium, like the Vera Rubin now, that's going to be used by a different customer than who uses Vera Rubin maybe like 8 years from now. And but there are customers, there's demand for it, and it works down the market that way. And so that was like, just, I thought that was the most exciting
that was fire in the
just
call.
For CoreWeave,
oh
but
man,
yeah,
it was so good.
One other thing too, Nate. So Intranter went on CNBC the next morning, and he said that this was a full freight purchase. So in other words, it's got to be something close. It doesn't mean it's exactly the same price as 2020, but there's not a big discount here.
I did not know that. That's why. Yeah, that's even more insane. Okay, jeez.
Okay, so a couple other things that stood out just as far as broad numbers. We'll talk margin and maybe like some weaknesses as well, and maybe what we'd like to see, or what surprised us as well. So they deployed a lot of power, 500 megawatts of power. I love this quote. It's actually my second favorite quote after the A100s. Is they said they deployed more powered capacity than any other neocloud has. So people kind of forget that with CoreWeave. You hit it at the very beginning, Jose, that it's almost disrespectful to call CoreWeave a neocloud. It's like the next highest hyperscaler. If you want to add a sixth one on there, that's CoreWeave, and you can see the amount of capacity they have. So that capacity is 4.2 gigawatts now. They also have an additional 1.5 powered land. 1 gigawatt is international. That is including the 360 megawatt expansion in Indonesia. That one's not operational yet, of course. As far as backlog, that was one of those things that I actually thought might come in a little bit higher, but then we read the footnote. So 104.2 billion backlog, which is massive. Out of that backlog, 50% is already being delivered to customers. So this isn't a backlog that just like hypothetically they might have this. A lot of it is, most of it is take or pay contracts. And the 40% of that backlog, so over $40 billion, will be deployed over the next 24 months. So the revenue for these things, like, it's the one thing that analysts have gotten a lot better at predicting, because I mean, it's right there. You don't even have to do math. You just divide, and there you go. They also, as far as the backlog, 25 billion additional backlog that came in the early third quarter as well. So we'll see that next. But they put that foot number. If they didn't put that footnote there, I don't know that we would have the same reaction, to be honest. Two other quick things too. Managed Inference, it's a new product line. Their annual run rate went from $1 million last quarter to $100 million this quarter, which that's a pretty good increase. It is annual run rate. Keep that in mind. They are projecting 250 million annual run rate by the end of the year, which is great. And then on the storage, CPU, and network side, which the Solidigm partnership I'm sure strengthens, that is up to a $400 million annual run rate. So from those numbers, and we'll save margin, I guess, from a little bit. Jose, is there anything that like really stood out to you as like this is exceptional, or this isn't like what I'd like to see, or any other number that I just glossed over? And Nate, after that.
I would say at first on the backlog number, I was a little bit shocked of how on the quarterly basis didn't grow as much. But after some deep thought, and I don't know if it's just a hopium in me, or just the one that believes this stock is just that great. But to me, I do believe at now their front end backlog is very limited of how much they can grow. Main reason is they already have a lot of this contracted. I think last quarter they mentioned that 75% of fiscal year 2027 is already contracted out in form of their RPO. So they're only able to get they can only build so many data centers. And because they can only build so much data centers, they can only promise so much revenue and customer allocation, or so much allocation to your customers. They have probably a visibility on map that, hey, we can't really promise much more in the next 24 months. And for that reason, now the short-term backlog, or that 2 years or less, is not going to be as impressive as it has been in the past. And at the same time, you also have companies that say, if you can't promise me 2 years, maybe I don't want to take that RPO that you're going to give it to me in 4 years, because I need to find that compute right now. So capacity in how much they can build, I believe now becomes a hurdle for their RPOs to grow. And while the market might see it as negative, I'm worried about some of the negative perspective on that. I think the reality is just, I'm not going to promise you numbers if I can't deliver that compute. So I think there is going to be some limitation to that RPO growth coming forward. And management has mentioned that they're being a little bit more careful on who they give kind of that compute to, because at the same time, they also don't want to just give it all to one customer, and what happens if that customer fails. So to me, I think it tells me that RPO growth might not be as crazy in the upcoming years or so.
Yeah, I agree with you. And do you think the market is understanding that, or is that going to be one of those that, that was one of those things that I hope, that there'll probably be 2 or 3 fireside chats that they have this quarter, and they need to do a good job of really forecasting that so they understand. Because, if they're expecting another 30 to 40 billion add to the backlog, maybe so, but that's not in the next 2 years. A little bit, but not much. Nate?
Yeah, I'm curious, just a question for you guys. I honestly don't follow Core nearly as much in terms of the nitty-gritty details. Have they talked about it all in terms of when they expect positive EBIT margins, or, even net GAAP profitability? That'll be a while from now. But EBIT margins at all, or any sort of guidance on that, or is it just EBITDAs? I know, like, what they did, 56% EBITDA margins, or 60, something like 59 this quarter, something like that.
Yeah, they didn't mention it this quarter. They did say something back in Investor Day before I was an investor, and I don't remember what it was. But analysts are expecting profitability in 2028. That's one of those things like Nebius does a great job on the earnings call, and I really wish CoreWeave could be more clear on when that expectation is, when they expect, or if they're like, hey, it's not going to be this year, but in the next 18 months, or like something. But they've not. Have they mentioned anything previously, Jose? Because they had some comment in Investor Day, but I don't remember what that specifically was as far as profitability.
Yeah, I can't say I remember anything. There probably is, but not something I've been following closely enough to share anything.
For sure. They should do better, and that would be really helpful, I think. So, and Nebius does that great. Okay, so a couple other quick things, and then we'll move on to Nebius. The one area which I think has gotten the most attention since then is, of course, operating margins in general. It got a lot of attention last quarter as well. They talked about it inflecting by the third quarter. So it actually inflected. We had a 1%, operating margin. But again, a lot of consternation over that, where they're like, 1% operating margin, and they're doing 9% on their debt, on their bonds. Clearly, Jose, this is going to zero. Am I right, or am I right?
100%. They're game over for them.
Why is that? Why is that the wrong way of looking at that?
I mean, the first thing is the reason for that massive margin compression at the beginning is, I mean, you're going from what, for a few hundred megawatts last year to now over a gigawatt, and you're adding 500 per this quarter. So just the change of the easiest way I think about it is last year I owned 200 houses. And in the matter of a year, I go from owning 200 houses and taking out mortgages and getting 800 more houses by the last quarter. And for the first few months, I don't have a renter because I have to do some quick fixing up. But then I know after this, there's this massive backlog of people that need to be living here. So for me to go from 200 or 800 houses to 1,000 houses, an extra 800 houses, and for a few months, I have to survive because of certain things that I need to do. For them, it's obviously turning on GPUs, kind of the cost that they get before the revenue collection. That's going to hurt your margins dramatically. And that's what's shifting now. Right now, it's crazy. They have 1 gigawatt that's now collecting revenue. So when you add 500 megawatts, which is what it would be insane a year ago, now you have 1,000 houses collecting revenue, and you're only building 500 houses. That ratio of your installed base to kind of your new base, it is nowhere near where it was last time. So your margins start to increase. And then you have obviously the other benefits of pricing of GPUs going higher, prepayment coming in a little bit better than expected, a lot more strength because of the demand market, better financing because people understand a little bit more of the GPUs. All that starts to add into that margin business. And you're having a product that was getting recontracted that is now like the A100, all that starts to get margin accredited. And I think the street in the next year or so is going to see how quickly that's going to start ramping up. So I understand why the market is fearful of that weave right now, but I think I think it's everything we're seeing is that story is turning around pretty quickly.
Yeah, and I thought Nebius did a fantastic job on some of these, and I'd like for them to borrow a couple of the ways that they framed it, especially like the payback period. But they did a good job on the margins overall, and obviously the stock market really liked the earnings as well. So beyond the 1% inflection, they said that, hey, that's going to continue over the next several quarters as well. We're going to continue to see that rise from exactly what you said. But in addition to that, they mentioned that new contracts that they're signing now are 5 to 10 points higher in margin contribution than they were previously. Again, that pricing pressure there and the supply constraints. Some of that is actually, a lot of that is Vera Rubin, just because it's one of those where when we talk about SpaceX, we'll mention a little bit more on Vera Rubin and how these are positioned with that specific product that a lot of people like. Nate, I know you're going to talk about Vera Rubin with Nebius because they knocked it out of the park with that one. That was my favorite part of the Nebius earnings. They raised prices across the board on all their SKUs in July as well, which is so it's not reflected in quarter two. I don't think that'll be fully priced in quarter three because usually when you raise, you give a little bit of a warning as well. You adjust some things. It doesn't mean that they did it on like the first day, but we will see that reflected in the next quarter. And then they've also talked about, I know Nebius also talked about this and did a great job on answering this, shorter contracts. A little bit different than what Nebius is doing with these auctions and very short dated. They're talking more about like 2 or 3 years, which of course shorter term contracts drives higher margin as well. So all of those factors are in combination. Analysts were like, well, how much is driving the margin and what percentage? It's like they're all factors. It's hard to break it down. It depends on the individual contract, but we should continue to see margins improve. Bears won't stop talking about it for now. They might not stop talking about it for another few quarters, but the writing is, it's very obvious what's going on here, even without that, just from the cycle that you mentioned, Jose. Any other thoughts on margin? And then I have one other note from earnings, and I'll ask you guys if there's anything else.
No, I think the only thing Corey needs to do, and I've said this before, and I think even Tanner and I were talking about it, is just Nebius is just a better marketing company. They're just better at hyping what they're doing and how great it is. And even just using the example Jose said, just explaining the payback period of their debt and their active gigawatt versus what they're building. I just think great company. They just got to do a little bit better marketing that to investors and analysts, and then it's to the moon, honestly. Because I think the investors will realize, we should be pricing CoreWeave with some premium as well, but we're not, versus what we are with Nebius. So.
And I know that was like a silly moment, but like honestly, I think it's a great thing that they're being a little bit more doing a little bit better with their social media and communication. Like I've seen them really step up over the last couple of months. So, and then this earnings call, like I didn't listen to previous earnings calls. I heard there was a lot of stuttering, but I read everything and I'm like, they've done a lot better. And that last fireside chat too, before the earnings, like a month ago, they've fixed some things. There's some things to learn, and I agree. Like listen to the Nebius earnings call, see what other people really like. Tell us some of those things. Tell us some of those details. The one last thing, they noted that this is counter to the narrative that they said the debt cost actually fell by 300 basis points, and that generates a $1.1 billion savings for them from the interest payments. So it's not something that bears talk about at all. Anything else stand out to you guys, good, bad, or ugly, from the earnings call in CoreWeave?
I think for me overall, even just the earnings call itself, it was the first full one I've listened to, and I came away pretty positive and strong. Where I feel like I've heard in the past that CoreWeave earnings calls can be a little weak or slow. So it seems like they're coming out swinging a little more, and maybe have a little more bravado. So I hope they continue moving that, doing that moving forward.
Yeah. For you, Jose?
I don't think there was anything outside of what we talked about. I think a lot of what we talked about, what was my exciting points is now I'm just curious to see how a lot of that build out goes out, because obviously we're not going to see every quarter of them doing 500 megawatts, but I do expect some strong numbers in the 100 megawatts every quarter. So I'm more just excited to see how they continue to build out. And now that they've created this inflection point, and I like what Nate mentioned, right? It's so funny how it seems like CoreWeave and Nebius both started in different angles, right? I think CoreWeave really focused a lot more in kind of those bigger players, those hyperscalers, which tend to be longer term contracts but lower margins. And Nebius really focused more on the enterprise side with a lot of those software solutions, which kind of came with a lot higher margin products. But it seems like they're both kind of shifting a little bit into the same place, where CoreWeave now has the ability to shift into shorter term contracts. But at the same time, they didn't feel that it seems like they weren't in a rush to do that just yet, as much as maybe the market would want. So it's funny that because of this, that many people think this is a company that is willing to risk it all, but at the same time, they're also being careful of, like, even if we have 1.5 gigawatts, we still would rather have those long-term contracts, even if it means lower margins, opposed to kind of getting into those shorter-term games all at once. They're doing it, but not in a crazy rush. And to me, like, it tells, I don't think it's risky for Nebius, but it is showing me that that CoreWeave is a little hesitant sometimes, which I don't mind in this crazy game.
Yeah, I think that the market would penalize it more if they were more aggressive than they have been, especially with the build out. All right,
I got a question for you guys. Sorry, I don't want to uneducated perspective of the 500 megawatts. Do we know how much is co-location versus owned, or is it all mainly co-location? I just don't know if you guys know the split at all, or if they've talked about it before. But okay, I wasn't sure. Okay, we can move on.
I'm gonna guess most of it is co-location because they're really only building their first data center right now. Okay. Yeah, so I think it's all mainly co-location.
Yeah, I it doesn't cover every single one of the data centers, but there's a great website, so great that I don't remember it. It starts with an E. 1 second, let me pull it up.
Sounds really good.
Yeah, it's great. Okay, it's Epic AI. I don't know if you guys have. They're not like a sponsor or anything. It just that's the wrong tab. Let me remove that. Okay, so this, I mean, some of it's like publicly available information, but they do a lot. They assemble a lot of data here. So I kind of went through this prior to the earnings, and they'll talk about, of course, where the updates are, looking at the individual sites, satellite imagery. You can explore that. You can break things down by what the actual product offering is. And then, like, you can go, of course, to the directory. Overall, it has just a bunch of data centers here in the United States and actually worldwide. You can type owners. So, like here, for instance, we can do Nebius. Here's the Vineland specifically. And so you can kind of see, the build out. You can see the expected and, of course, these events that have happened over time. And so, like, going into the earnings call, and here's IT Power. It's usually how they break down things in terms of the megawatts. But going into the earnings, I was like, man, with CoreWeave, they had a huge ramp into that quarter, and I think that the market might be really excited about that because everybody's talking negatively about CoreWeave, and this was one of those sites that really helped me on that. So it's a good one. Yeah, Epic AI. There's no subscription or anything. Maybe there is for some of these things, but good to use.
Yep, that's cool actually.
But yeah, what Nate said, the facilities that came online were all the further developments at the Galaxy Digital one, and also the Applied Digital APLD, and 2 others as well. So, you ready for Nebius?
Oh, I'm ready. I'm ready for the show.
Yeah,
I got 3 complaints about Nebius, so I'll obviously we'll wait for Nate. But there's 3 complaints I have, and I want to see what Nate thinks about these complaints.
All right, let's hear it. All right, I'll go ahead. I think the first thing we'll start with is earnings. I feel like just the most exciting. And I'm sharing my screen now, so I think you have to click.
Oh, my apologies. Yes.
Thanks. No, you're good. Cool. So yeah, Nebius smashed earnings. Well, he said smashed earnings. They beat earnings. It wasn't like a crazy beat in my opinion in terms of revenue. EPS was the crazier beat, I think, and that's why the market kind of rewarded them, because the margin expansion. ARR was $3 billion at the end of June versus $1.9 billion in March. So it's 56 or 58% quarter over quarter. Adjusted EBITDA margin was 50% versus 24% in Q4. They raised contracted power to 5 gigawatts. Capacity footprint obviously expanding, and they reaffirmed guidance. So overall, good quarter. I think a lot of people were pretty hyped and expecting a ARR guide or raise. I was not, just because of Vineland. I think they're waiting to confirm that that's good and going. I do think Q3 they will raise, and Q4 they will beat, and probably beat pretty significantly with everything they're doing. But overall, really good quarter. Now, talking about marketing company, I think this is where they kind of take the cake with just like their very simple 3rd grade language graphics of showing, hey, look, our payback period is 1 year and 10 months. Our TCV grew 4x quarter over quarter. Our ACV per megawatt in Q2, which this was crazy. So I think the reason the market also like this is because this hasn't really been broken out before. They've never explained their rate per megawatt. We've had to kind of go in and do some DD and figure out based on bare metal deals and what data center they're using and try and do some math. Whereas they're now just outright telling us what megawatt rate they're getting. Go ahead.
Can you zoom in 1 click more?
Yeah. Is this better?
Yeah, that's perfect. Yes.
Okay, sweet. Yeah, so I think this is one of the also massive graphics of showing in Q2 that all the deals averaged over 20 million per megawatt, which is insane. That's an average, by the way. That's not like that's crazy. Q3 short-term capacity deals over 40 million per megawatt, which that was also insane. These are also short-term deals, as we know, for people. I saw a lot of posts applying this 40 million per megawatt rate, and I was like, guys, what are we doing? That's not how this works. These are short-term deals. And I think that was silly. But overall, really good quarter. We also talked about, for people that joined the Data Center Monthly last month, Estonia as a rumored data center, and boom, look at that. They actually announced Estonia in this call. They also announced another UK site, and I believe I think just another UK site and Estonia site. So they announced 2 more sites this quarter, which again just shows they're growing. I like to see it. Contracted power, 5 gigawatts. I think the other reason it got a little bit of a re-rating, I guess you could say, is adjusted EBITDA. They spoke last quarter and said that they expect adjusted EBITDA to be weaker and blah blah blah, and they come in and beat it by 5%, and now have an adjusted EBITDA of 50%. So I think one of the reasons I also like Nebius is they very much sandbag and beat. And they've been doing that for the past basically 6 quarters. They haven't really missed on any metrics. They maybe missed revenue by like a couple million one quarter, but they really come in and sandbag when it comes to revenue and just EBITDA. Again, reiterated guidance, $8 billion in cash. And yeah, that was really the main headlines. We also had a bunch. We don't have to sit here and do all of this, but we had a bunch in the shareholder letter. I think 2 of the biggest things was first, doing their first ever auction in short-term capacity deal. So we heard about SpaceX doing the 40 to 50 million per megawatt with Google and I think Anthropic a few months ago. And it was sort of like, oh, this is a SpaceX unique thing. No one else is doing this. And personally, for me, I wasn't expecting Nebius to do it. It would have made sense, but it wasn't on my radar. And I think that's one of the things that kind of blew it up was, oh my God, Nebius can now also charge 40 to 50 million per megawatt. And they even said in the call, like even higher. And I think this is just bare metal. I don't even think this includes their inference platform token factor. So if it's something like that would be even higher. So that was the first big piece I think that was important. And then the second was talking about the payback period. I mean, this was easily probably for me, where I was blown away on what it was. I don't know if they had it in here, but it's 1 year and 10 months. Oh, here it is. Yeah. 1 year, 10 months down from our 2 to 3 previously. So, and I don't know if it's year over year or quarter over quarter, but if that's quarter over quarter, the payback period has jumped significantly. And I think that's also why the market gave it a re-rating. And we can see that continue. Like if they're able to push up these deals per quarter, this could be a year and 8 months, and then a year and a half, and a year and 2 months. And then the market gets really excited because, and I get excited, because they could become more profitable a lot quicker than I thought. Because I wasn't expecting it to at least 2028 as well. There's genuinely a possibility they become profitable in 2027, which is insane to say. And I think that's also why the market is forward looking here. And that's why you saw that re-rating. But I've been yapping a lot. Anything else that you guys want to cover or miss? There's a lot in here, but I don't want to go over every little thing.
Yeah, I thought the short-term auctions were really neat. So like they're looking at not even like the short term that CoreWeave is, where it's like, hey, 2 to 3 years. They're talking about like 6 months. And the
Crazy.
auction specifically, it seems like it's with the Vera Rubin. The pricing that they're getting for that is steep. And it seems like there was, just from the language that they used there was a lot of interest, a lot of bidders, including the winning bidder was like, hey, next time you do this, we also want to bid still.
Which is insane. Like,
it is.
I this is where I do agree that like I just don't know how long this lasts, but I'm here to enjoy the party because there's no way to predict when hyperscalers, because I would assume most of these bidders are big labs, hyperscalers, and large enterprises. You're not talking like 100 billion enterprise. You're talking hundreds of billions of enterprises to be able to afford this. And so I just don't know when the party stops. And so that's obviously what I'm curious to see, but it doesn't seem like in the next really 4 quarters it will. And that's just where it's insane. Like you said, Roy, like the whoever won the auction literally said, hey, when you do it again, we'll come back and bid more. And it's just like, when does this end? And at what rate does it stop?
It's 3 years, full depreciation, and 3 years, zero value for Vera Rubin. So,
yeah. Anything of you, Jose? What did you listen to the call at all, or did you just get like a glance at the numbers? Or
I for this one, I read the transcript, and I really enjoyed a lot of those numbers. I mean, I think even the shorter payback period is only counting Q2 deals, and like you saw quarter.
They did say that they signed our first one this week for the 40 to 50 million. So
Yeah.
that's Q3 technically. But
yeah, but the payback period of 1 year and 10 months is only on Q2 numbers. So what is the payback
crazy
with these Q3 type deals? So
exactly, yeah.
So I like that a lot. And I agree with what you mentioned is, I personally believe these higher megawatt deals would only be possible to players that had massive AI infrastructure like SpaceX. I thought that was one of the reasons that SpaceX was able to sell, because I obviously read a lot of semi-analysis, and that's one of the reasons that they gave that SpaceX was able to charge these crazy amounts is because of massive AI infrastructure. But now Nebius is saying that we can do this too, even without selling 200 or 300 megawatts. The market and appetite is still there.
Yep.
And now, so a lot of bullish things. I agree with everything here.
Let's hear the bearish thing. Go ahead.
I don't know if it's bearish thesis. I have 3 complaints. All right, 3 complaints. The first complaint is, I am very happy you share as a company the amount of money you get per megawatts, right? That megawatt deal. But you don't want to share your active power with me? Like it's like you're giving me half the equation. Why can't you give me active power? So that's not a bearish thing, but I wish management would share that a lot better.
Yep.
And it's because a few quarters ago, I think before Q4, they used to share that number. They were giving it, and starting Q4, for some reason, management went quiet on active power. And I'm like, if you're a data center player, why can't you just give me this number, right? I think it's helpful, especially if you're giving me how much money you make.
I would agree. They did only really guide for connected power, which again, like you said, is not active, which is like, that's what we care about. Yeah. But we do have our little, what I call the Nebius nerds. And we did build a website that has and tracks every data center. We're currently at 300 megawatts of active power. And we can actually, it's probably really hard for you guys to see. And unfortunately, when I zoom in, it doesn't do the map itself. But you can click into each data center in each country. Oh, there we go. And you can see the active capacity for each data center. But again, this is just if you're interested. And then you also have a massive data center timeline. Love the community, and they built something like this if anyone here also is interested. But yes, I would agree. I would like to see them talk more about active megawatts. and it is it is a little frustrating.
Yeah, and I think they even gave us hints. Like they mentioned, for example, that by the end of this year, they were going to have 800 to 1 gigawatt of contracted power, and they believe it was going to be fully revenue generated by the second half. By I forget the beginning of the second half of next year. So with that kind of math, you can assume that they expect at least 1 gigawatt, 800 to 1 gigawatt of active power by next year. But again, that was more just me nitpicking, and I think a lot of what I'm going to say is more just nitpicking. It isn't really a bearish thesis.
Yeah.
The second thing is, they mentioned they're holding out compute because they believe they can get better pricing.
Statement. Yes.
And I think that's great as a business world. But I think, and maybe I would be a horrible business owner, I think you have to have a fine line of being good to the business, but also being nice to your customers. And to me, for you to kind of say out loud live that I'm holding back compute just because I know 3 months from now I can shake your wallet a little higher, it's not something I enjoyed from management. I think for shareholders, it's extremely bullish, right? You're telling me that you're going to be able to do it. But it gives me that taste like memory players right now. Like memory companies are just shaking you out on your wallet. And eventually there becomes a world where the dynamic of balance of supply and demand shifts, and certain customers remember certain things like that. And to kind of persuade with that moment, with that take, is the auction, right? The auction kind of gives me that same type of taste. It's like you're now only serving one customer in theory, because if someone is able to pay 50 million per megawatt, that means that person gets a lot more money on that AI, on that power. The reason they can do that is, I'm going to guess this is a frontier AI lab, because frontier AI labs tend to have the highest margin on the tokens being sold. So they can, sure, yeah, I'll pay you 25 million per megawatt, but after I do my margins of selling a token, I'm actually generating 50 million or whatever, just a lot higher than what they can pay. But it only limits it to frontier labs, because other companies, they're already paying they're going to be paying for tokens and everything else that it already prices out the market. And that's what you need to do when supply and demand is so high. The capitalist world takes over and kind of you control supply or demand by increasing pricing. Yeah, I would say not necessarily bearish takes. It's just left a little bit of a weird kind of sentiment for when this market is not as an imbalance as it is right now.
Yeah, that makes sense. And I also know the IREN, that's sort of, I guess what I've heard from investors, that's their same strategy, is that's the reason why they haven't signed their contract, is because they think they can get better terms the more they wait, which is an interesting thesis, which could also be true. But yeah, I get that. But yeah, I do agree that I think as a customer that can be frustrating. But yeah, like you said, as an investor, I'd rather them do this than not. But yeah, I definitely get it. It makes sense to me. Roy, any thoughts on your side?
Yeah, I was gonna say, like, I've heard the flip side on CoreWeave. CoreWeave, they sell out their capacity. Bam, it's gone. And then I've heard people also complain, like, oh man, they sold it, but the pricing went way up and they missed out and they're locked into these. So yeah, like, no matter which way you look at it, people can nitpick it, and they are. But yeah, like, I think one is very clearly better for customers and for that long-term relationship, and one is clearly better for investors and for the stock. I don't think either way is necessarily wrong or immoral or anything like that. But
and that's why I'm glad. I think it's, sorry to cut you off. I think that's all. I'm glad it's specifically just short-term deals. Obviously, with their enterprise customers, they're trying to obviously focus on that client relationship and more white glove service. Where they're just like, give me the money, show me your wallets. And selling is really short term, but yeah, I would agree.
Yeah. One thing that I thought was really well done on the earnings call too, and it was the only thing that I was really concerned about with Nebius going in was the Vineland update. If they were going to be able to deliver on time or not. Shifting over from the Bergen engines over to the Bloom Energy, the scandium generators. And, this is, I thought it was handled well. It was answered well. They continued to reiterate and say, hey, everything's happening on time. Let me remove your screen here.
Yeah,
this is one that somebody here in my comments had shared with me. I had not seen this prior to this. There was another in addition to the other two short guys that we're talking to. Nate, so yeah, this is just a from Hunter Brook. Vineland city officials issued a stop construction order on August 10th. That's before the earnings call at the Vineland campus there, citing no prior approvals or plans. And of course, the response from Nebius was there in the earnings call itself. Second stop order supposedly in a week. I just know what I looked at here just briefly right before this, Nebius. So not Nebius, Nate, Nebius, Nate the Great. Have you seen this? And then how do you perceive this as a Nebius shareholder?
Yeah, so there's a lot of stuff going on here. So Hunter Brook actually used to have a position in Nebius a week ago. They sold on August 6th, and they also have a short on Bloom Energy currently active. So keep that in mind. And then second, and I'll share my screen here. And also, like you said, this was before earnings, and then Nebius on the earnings said, "Hey, we're fine." And I think what's going on is basically there's a fine they have to have, and they're just going to eat it. So if you read here, Vineland construction is proceeding even with a stop work and order in place. Images from that account last week show Bloom cell fuel cells being installed, and recently released documents indicating LNG tank construction is underway. Both are covered by the stop work order. However, Data One can get around that stop order by paying a $2,000 penalty per day. Data One may also appeal to the order before the Construction Board of Appeals of Cumberland County. The current protest in our previously approved site plan that will be now amended to carry an even lower emissions footprint than before. Don't read that part. Basically, this is a rounding error for them. And there's going to be a $2,000 fine per day, and they're just going to keep going, is sort of what I'm getting. And that's exactly why Nebius said we're still on time. We're still going to deliver the megawatts. Now, I think there is concern that Vineland, the building itself, could be delayed. But I think, and I think Manuel read the contract specifically, is they can technically shift that workload. As long as they deliver the 300 megawatts under that obligation, I think they technically can still deliver the contract under the obligation, essentially. It might be a verbiage thing. I could be wrong. And so maybe there's some concern there that maybe Vineland does have some delays, but they'll still be able to deliver the megawatts. But it seems like overall, Nebius management team has come out and said, we're still on track. Even in their press release where they raised some debt 3 weeks ago, they said, hey, we're still on track. And so it seems like they also understand what people are saying and the FUD that's being spread. And so they continue to kind of come on and reiterate. But it's definitely something to monitor, because if this does get delayed, for people that don't know, I think 3 of the 9 billion of top line ARR is from this Vineland site. So if it does get entirely delayed and for some reason has to stop, that's going to hurt. That's going to really hurt. Now, it will be, I would say, a short-term Band-Aid over a couple quarters. It will be fine long-term, but it will definitely suck, and the stock will get hit. And so, yeah, it's definitely something I want to monitor. But it seems like for now, they're just kind of paying the fine, because $2,000 a day is literally pennies to what they're actually going to generate in revenue and ARR. So,
okay, interesting.
Yeah.
All right. IREN, just one moment. Clairvoyant Trader says CoreWeave compute is free. A100 contracts are freeing up. Almost free. You still have to pay for the location. You still have to pay the power. But yeah, it's that was our favorite spot. You can rewind a little bit, and we talked about that in the earnings call. It's amazing. It helps further destroy the depreciation myth. Thank you for the $2. Any last Nebius notes there, Jose? And then you can take. No, news, Nate. Any news on Nebius?
Oh man, I think I pulled up too much, so you don't have to go into everything.
Well, okay, yeah. Well, any highlights for you, like over the last 3 weeks with Nebius outside of the
I would say I was really excited to see them come online with Kimi K3 as fast as they did. I think they were the first NeoCloud first. I don't know if they were before like Fireworks or the other ones. Fireworks might have beat them, but essentially they were basically one of the first to come online with Kimi K3 over a weekend. We had plenty of people on the Nebius community talking about it, so that was great. That was really the first big thing. I also was really happy when Nebius was one of the first to sign the open letter from Jensen. Jeez, how did I forget his name? From Jensen. And then I would say the last big piece of news was 2 more. One is there might be a possibility, and this Nebius community of nerds, we find everything. And Roy, if you can share my screen.
Yes. We
find everything, and it looks like there might be rumors of a Vienna site in Austria for Nebius. And like you guys have seen before, basically every time we find a site, I'm not a part of it. I'm not that in it. I just find it from other people. anytime someone in the community finds a site like Estonia, Wales, Vienna, Austria, looks like possibly India, they typically 90% of the time become true. So it looks like they could be expanded to a 7th or maybe even 8th European country, which is great. When you want to be a hyperscaler, you need to help with latency and being international, being global. I think this is super big for what they're trying to do, and love to see that. And then the last piece is a really interesting piece here from Jim, who also turned bullish on Nebius after this quarter, by the way.
When,
Go
by
ahead.
the way, I saw you message and say Jim turned bullish, and I thought you meant Kramer. And
Yeah,
this is a
I
bigger
know.
deal.
Everyone said that. Everyone said that when I said Jim went bullish. I was like, oh my God, you scared me. I was like, my bad. That will happen again.
For our audience, if you guys don't know Jim, he was our first guest on Data Center Monthly, and he's a huge IREN bull. He does talk about CoreWeave and Nebius quite a bit as well. Brilliant guy, worth following, especially if you're in IREN, but really with any of these. Go ahead, Nate.
Yeah, so Jim brought up a really interesting thing, and I'd love to know, first of all, who, if this is true. So for context, there's a possible $33 billion contract for Missouri. Was talking to a big neocloud whale and said that Nebius is in late stage discussions for a $33 billion 5-year bare metal contract with Google or Meta for their Independence, Missouri site. For people that don't know, the Independence, Missouri site is a 1.2 gigawatt fully owned data center they're building. So first, I thought it was really interesting. I think it does line up with Google. We heard them on their earnings call talk about how they're looking for compute during Q3. Now, I don't know if Google really stated. I think they might have. It sounded like their tonality was more of a short-term compute rather than like a massive long-term contract. But we'll see. And then my second thought here would be like, who broke their NDA under this deal to tell Jim? And so that's where I'm, more speculative than believing this, because it's like I just don't know how this guy knows. But hey, you never know. But this would be a really big deal. I would love to see Google this, and as Nebius bulls, we know that they've talked before that this would most likely be their last hyperscaler bare metal deal, because the reason they were doing these deals was to be able to get financing. And so this would be interesting. I really would hope it'd be Google so they can diversify across, Meta, Google, and Microsoft. I think that'd be great rather than having 70 billion with Meta. I want them to diversify, across these hyperscalers. So yeah, this would be a really big deal and really interesting to see over the next couple months if it does happen.
Do you know if these type of deals that they're doing, are they take or pay contracts for Nebius? I'm assuming they probably.
I'm trying to remember. I think the Microsoft deal wasn't, because it was the very first. I think Meta is definitely closer to that, and this probably would become more of a pristine, I would assume, contract, and more tight knit, sort of like the later CoreWeave deals. But yeah, they don't have. I don't think it's technically a take or pay that they have right now with Meta or Microsoft. And so that's why there's a lot more urgency also on the Microsoft delivering, because I think technically Microsoft could just back out and be like, all right, we're done, which would really hurt. So,
but at current price levels, that means they probably can resell for a higher price. So
correct, true. That's a great point. Yeah, true. But yeah, that was more of the recent past stuff. Crazy enough today, though, literally 2 big things happened today for Nebius, if you guys don't mind, and then I will stop yapping. The first thing was we knew about a Wales deal, and I've talked about this before. And so now it's actually official. As of today, Nebius is partnering with Vantage Data Centers to deploy high-density Nvidia AI infrastructure at its CWL1 campus in Newport, Wales. And for those that don't know, this is their asset-light model. So we've heard about their asset-light model. Essentially what that means is Nebius provides the services, or really just the software stack and training, and they partner with a company that provides all the capital. They they buy the GPUs, the land, the networking, and everything else. And so this deal in Wales is a 150 megawatt site, where Vantage Data Centers is going to be the asset-like partner and pay for the data center. And so this is going to be really interesting to see if Nebius talks about this next quarter in terms of like what it will do with margin. Because if you really think about it, this asset-light model is just straight margin and revenue producing. So this is a really big deal, and I thought that was really cool. Any thoughts on this? And I think there's another. Someone might have put it down here, but I think it's 148 megawatt center, which is really cool. So,
yeah, that's awesome. It's one of those more of a macro thing, but the EU mentioned that they're going to be the first AI supercontinent with somehow less compute than what Google alone is bringing online. But Nebius is one of those where we talked about it after the earnings call, but I think they're positioned pretty well to win some of those if they want to. Either way, yeah. Like when I entered the earnings report, I had a couple of notes and concerns and things I was looking for, and I was I emerged after that. I was like, that was a great earnings call. And I actually really loved the effect of CoreWeave going first in the evening and then Nebius going next after that, because it felt just like a drumbeat of a lot of other companies are doing this, but people are just so focused on whatever strange bear case. And there are some bear cases that are legitimate and worth paying attention to. But between CoreWeave, between Nebius, they had different ways of kind of saying the same thing. And they have some different approaches, but I was like, it was awesome just having that effect of like them hammering these points in within like a 12 or 14 hour period. So I love that.
Yeah. And then the last piece of news here is Nebius is expanding in Mansala, Finland. I can't say that right. Mansala, Finland. And these again are their own data centers. And I would say Finland is like their pristine data center they have. I think it's currently 365 megawatts or something like that. They fully own. That's where they're going to be doing their Vera Rubins as well. And so they're now expanding it by 70 megawatts, and that's expected to come online in 2027. So they basically just added a quick $1 billion of ARR overnight, which is great. And so this is great to see as well. I mean, they're just expanding and growing like crazy. It's like every week there's some sort of, whether it's 10 megawatts or 100 new co-location or data center building. So they're growing like wildfire.
Yeah, that's awesome. Any other notes there, Jose? Anything on Nebius that you really keyed on or saw beyond what Nate presented over the last few weeks?
No, definitely. I mean, it's impressive how Nate, how much you cover this stock. So I mean, obviously earnings. I had my nitpick moments, but obviously I mentioned that the overall segment is extremely bullish. So nothing else to add here from what Nate already shared.
Yeah. All right, Jose. We have an audience that is eager and chomping at the bit for it each time, especially because Nate and I don't cover and watch as closely IREN, and that's not because we think, hey, it's complete trash. There's some things where we don't like nearly as much. We're not shareholders, but yeah, there's a lot of opportunity there too. Why don't you tell us about that as far as the news, and then maybe tell us, because I don't know if they have the actual earnings date. I think the 27th was the expectation.
Yep.
Tell us kind of what. Oh, great. Tell us what you're looking for in that too. So why don't you take it from here?
Yeah. So let me just start by saying that my IREN position is nowhere near my CoreWeave position. And I kind of it's funny. I don't know. At the beginning of this episode, I kind of did a disclaimer that I felt like I was signing one of those forms where I only disclose that I have over 10% position. But right, so it's like, and I saw some comments. Jose only has 10% in CoreWeave. It's much larger. I would say it's definitely closer to like a quarter of my portfolio. But again, I don't know why I was making it seem like I was signing just a financial.
Jose's 13G.
13F.
Yeah.
13. Yeah. So IREN, I would say, is probably like around 5% if I was to guess on my number. And I'm a recent bull to this. Maybe I could explain why I became recently bull into this market. And it's probably weird to say, but I follow Nvidia. Nvidia was kind of like the investment that completely changed my life. And one of the reasons that even if I go extremely heavy on the stock, I've been blessed to say that no matter how heavy, Nvidia makes it not look heavy in forms of percentage-wise. But Nvidia to me is that player that is leading this AI story. And to me, when they make partners with someone, I feel like Jensen is someone that really cares about his legacy. And when he teams up with somebody, for me, it holds a lot of weight, just because of how much I follow this business. And in the past earnings, they announced 2 partnerships with Nvidia. The first was the ability for Nvidia to invest in the company. I don't care about that at all. The second one was kind of this backstop where I forget the actual number of, it was north of $3 billion. I think it was 3.6, but some form of backstop that if you didn't rent out your GPUs, I would be able to I'm going to pay out for you. Jensen, in my opinion, wouldn't do that unless he felt comfortable with IREN's ability to stand up a GPU infrastructure and, more importantly, be able to serve customers. And one of my bearish takes before that was I didn't think IREN had the engineering to, one, be able to have a massive infrastructure and then be just a bare metal solution. Like I thought that's where they were just going to be. But then Jensen kind of shared in my investment by doing this backstop. He's not going to do a backstop to a neocloud player that he believed was going to have massive issues, because then he was just going to have to pay that money upfront on his end. So that completely shifted my thought process. And in that same quarter, we saw I ran through a few things. First, they announced an acquisition, and I forget the names of a company. Is this the software solution play, or
Yeah.
no?
So
they did
the
two
Kubernetes.
Yeah, so they did two solutions. One to increase exposure in Europe via Spain, and the second one was kind of to increase some of their software stack solutions on that. So all that put together opened up for me the opportunity to look into IREN a little closer. And with IREN being very new to the AI space, right? I think last quarter, I have the numbers here. They were collecting in last quarter in terms of AI revenue, $33 million, right? $33 million is nothing. So when you have what we started seeing in the overall market, even like a quarter ago, was shorter term contracts were highly margin profitable. And if you're starting with a small base, and then you have Jensen telling you to do these backstops, and you're able to build a GPU and not have to sign to Microsoft, and you're starting a small base, now these short-term contracts have a higher ability to raise your margins, raise your revenue dramatically, compared to like if CoreWeave, right? CoreWeave starting a short-term contract right now isn't really going to impact the business that much, because they have 1.5 gigawatts of compute, and most of it is long-term rental. For Nebius is still really good, but again, you're already talking about 300 megawatts of active power. So even if you start doing more heavy compute or more short-term contracts, it's impressive, but it's not going to be that crazy growth story like you see with someone starting fresh, right? So I would say that was the real reason I started getting into IREN, and then obviously power solutions and the power constraints that we see in the market right now. You have that 5 gigawatts of contracted power. They even talked about their timelines that by the end of this year, they want to have, let me have the number, pull up the numbers. By the end of this year, they want to have 480 megawatts to be active by the end of this year. And by the end of 2027, they want to have about 1.2 gigawatts to be active in power. So they're scaling. It was more of like starting from scratch. Based on what we know from the market, the probability of success, the Jensen backing, the probability of success has increased. So maybe I just want to share the thoughts. Would love to hear from you guys first, and then maybe we can look at some of the other numbers they presented.
Yeah, I mean, like that is like each of these are positioned a little different way. I did an article kind of breaking down just like a broad brush overview, and so I called CoreWeave the feedback loop. I called Nebius, just because it's easy, the nebula, and then for IREN the landlord. And one thing we'll talk about, of course, the Burry short thesis and everything like that. One point that I thought he made that is a fair point, and it is a fair thing for bears to look at. And they say the reason why all of these neoclouds talk about megawatt and gigawatt is because power is the rare resource, and IREN has it. And so IREN, of course, has these massive centers here in Texas, and we'll talk about the Texas pause as well, but that doesn't impact them. They're already powered. They're already good to go. Like, that's not an issue. There are maybe other things, chinks in their armor and weaknesses. All these have strengths and weaknesses. But yeah, I've said it before with IREN. The leadership does kind of, it's not my favorite, and it's not my favorite of the plays. But in a world where CoreWeave and where Nebius just didn't exist, I would probably own IREN. I mean, it's really, really compelling. It's trading, at a disconnect compared to the others as far as valuation. I think part of that is deserved, part of that's not. But I also liked what you said as far as them strengthening from bare metal, which I thought was the wrong approach for IREN. I was like, I don't know about that, to actually beginning to form a neocloud and realizing, by the way, like their mistakes with saying, hey, we didn't need marketing at all. And like, okay, we actually need marketing. Let's buy a marketing team, essentially a marketing company there in Australia. And then we don't have what we need as far as neocloud. Let's go ahead and buy that as well. I would, I don't own them, but if I was a shareholder, I'd much rather them admit that and be like, hey, we're reversing course here, than just say we're going to stay the course and run this off a cliff. So yeah
I think for me, it's a few things. I think how I invest too is a management team is my number one priority. That's the first thing I look at every time. And I kind of like Roy said, when it comes to CoreWeave, Nebius, IREN, I just prefer Nebius' management team. I think for IREN, I don't like the fact that they said they don't need a sales team and then hired a marketing company. Then they also did the amount of shares they're going to get no matter what the stock price does. So it was, I don't like that part. But I would agree that like they have their moat is their power and land. Like they have so much of it. Into where I just think I would agree that if Nebius and CoreWeave didn't exist, IREN would be a good play. I just think even from a customer perspective, who would you trust more? You're going to trust Nebius and CoreWeave far more than IREN, in my opinion, because CoreWeave gets you that first to line to Nvidia products. Nebius has the engineering team background, and so I think you have two aspects there, which that's why you've seen CoreWeave kind of lean more towards bare metal, Nebius lean more towards inference, and I just feel like IREN's sort of just the middle child of just they're there and they have great value, but I don't know. I just think for me, it's just a way of investing. But I do think I'm much more of a concentrated investor. If I was diversified, I'd want to own all three. I just think why wouldn't you? But I'm just way more concentrated when I invest, and so I think it's just honestly more of an investing style rather than the company's bad,
And I mean, for me, I have never truly worried about compensation in any investment styles that I've done. So for just like Nate, how you mentioned, right, very concentrated. So you follow. I'm not going to start a new process just because I see everybody talking about it in a negative sense. And to me, I feel like my IREN position is more mainly because of the dynamics of the market that we're in right now, right? If we were in the different dynamics, I definitely would just be more solely in CoreWeave and that's it. But in this market that we're in right now, a company with sub $15 billion market cap, and then we know you're going to build up nearly 1 gigawatt by 2027. And obviously, as an investor, this is one that's starting kind of fresh in this neo cloud market, I guess, in forms of AI revenue. That's a risk, right? Are they going to be able to deliver? And maybe we'll share some of the news later of IREN that they did their first 50 megawatt for Microsoft. That gives you a little bit more data point. And I think for IREN, that's the thing. And for me, one of the biggest risks is I just didn't want to buy a bare metal pure play. Again, it's like, why would I want to do that if I continue to hold? But now when they continue to see that those exemplar statuses on the GB300, on the B300, you start to get that data points outside of just management that's tell you, look, they're heading in the right direction. And finally, I mean, last quarter, they mentioned that, yes, they went with the sales team, but one of their biggest sales tactic is Nvidia right now. And this is something that is very crucial in the AI space right now and we see a lot of companies go out and do it where you as a chip player, you can't just sell the chips or the servers themselves anymore. You have to also have the ability to have that power rented out for yourself. And then, like, let's say Nvidia, someone goes and say, hey, look, I need to build 1 gigawatt. Nvidia can gladly now say, maybe 1 gigawatt is crazy, but it's like, hey, I can sell you the chips, and I can also have this partnership with IREN, who I know has the power, and you can build it there. So it's like, Nvidia, I think, is just driving this ship a lot, extremely well. So if we weren't in this dynamic, I don't think I would be owning IREN. But because of the dynamic and the way I believe Jensen is there, it's funny, right? It's supposed to be in IREN segment, but I'm talking more about Nvidia. But it's just because I do believe they're driving this ship so well that a lot of neo cloud players, if they start to show results, and the results are there with some of the exemplar status, with that partnership that we saw of Backstop, that gives me a lot more confidence for the company.
Yeah, I would agree. I think it's been great seeing. I think it was the B300 before, now the GB300s they got. Both within the past, I think, like 6 weeks. So yeah, I think it's great to see, and I would do agree that there are more signs, and like you said, they're probably going to be doing like the revenue and market cap in about 18 months from now. And so I do think it definitely on that side of things could be an undervalued play. If I wanted to trade it, I probably, I've considered and I have swing traded it before. And so it's something I like to swing trade because I do think it deserves momentum. But yeah, no, I fully agree.
As far as news, you touched on just briefly the Horizon 1 being delivered. They announced today. I threw that up while you were talking as well. Horizon 1 delivered. IREN has delivered Horizon 1. I believe that this is this 50 megawatts or to start?
Yeah, I think they're in 4 trenches. Let me just confirm really quick on my notes.
Yeah,
So you mentioned
the first of 4 of 50 megawatts
50
under its 5-year. Yep.
Yeah.
Under its 5-year
Yeah, and
deal.
then, but like you said, Jose, what and the final amount, the full amount is
9.7 billion.
Thank you. Yeah, yeah,
Which,
a
to be
massive
fair, it's
amount.
relatively small comparatively to the other contracts. But
Well, for the size of IREN, like that's
true. Yes.
and
True.
what they're delivering.
Yeah.
Yeah. Okay, so any other news that you would like to touch on, Jose, and then let's talk some earnings. What you're expecting, what you're looking, what you're wanting to see, as well.
Yeah, I don't think I have. And my apologies. I don't think I have too many news on that. I think the biggest one was just that the exemplar status that we saw with the GB300, and then the confirmation that we got today on it. And in regards to earnings, obviously, I would love to get more commentary on everything being on schedule. I think that's going to be the biggest issue, is make sure we already know they're trying to serve this Microsoft deal. We know Trench 1 is happening. One of the commentaries that I'm hearing from other companies is one of the data centers, because it's becoming more of a normalized thing. Everybody is building not everybody, but people are building data centers now. The actual timeline of building these has been reduced. I think I heard Sterling was the company that mentioned it 2 weeks ago during their earnings. Is timelines to some of these build-outs are getting faster just because it's becoming more normalized to do it. And IREN has talked about that they kind of have this full stack structure from just building the data center itself, to finally putting the GPUs there. So for them, if you're kind of having that full stack solution, that rate of improvement should be even better than the rest of the market. So we'd love to see if there's any shift in timelines, or for future, hey, we can now accelerate our growth potential for maybe not 2026 or 2027, because we have improved the efficiencies of data center buildouts. Obviously, kind of the stuff we're seeing in Texas and other parts of the world, just confirmation that it's not going to impact them. We'd love to get clarity on that. And then would also love to hear more outside of just the Microsoft deal, if they're pushing short-term deals after this kind of Nvidia backstopping that they have. So we'd love to get just more clarity on any of these short-term deals that they're working with. For me, though, in my investment style, I am the type of investor that really doesn't have a number I look for on a quarterly basis. So in any stock, it's very rare for me to say I expect them to do this revenue. It's more of, I look at what you promised me last quarter. Are you meeting that success? And it's the rest of the story that you're telling me. And that's why I enjoyed reading transcripts. To me, transcripts are a wealth of information for investors. Has there been any shift in the tone of what you're saying? And then if everything looks good, I continue to hold, and we go on from there.
Yeah, no, I love that approach. Yeah, a couple of comments from our audience. J. Kim says IREN's earnings for calendar Q2 and their Q4 will be a disaster. They'll book almost no AI revenue, and they'll have massive losses for discounting crypto. It'll get a lot better in Q3 and be awesome. He talked about that too in the comments. So I don't think he's a bear. I think he owns it. But he says IREN will bring on 480 megawatts this year, currently 85 contracted. They'll bring up to 720 megawatt next year. The contract amount is still unknown, but it'll probably be under 50%. This gives IREN a huge advantage. And then another comment from Luis. Luis say, for IREN earnings call, I want to hear about Sweetwater site for H5 and H6. Certainly that would be a good update as well. And then curious on this, Nate. What do they need to do? Because they've not done earnings yet. Is there anything they can do to change your mind? You're muted.
Of course, I'm muted. I think for me, it just comes down to management. I think they have the power, they have the moat. I just think I've seen maybe I haven't paid enough attention, to be fair. But I feel like I've just seen more flip-flopping from management when it comes to we don't need sales, hire a marketing company. I just think their verbiage is a little bit more flip-floppy, but they are, and I do think they're, comparatively to CoreWeave and Nebius, more of a under what's the term I'm looking for? They just haven't been in the space as long. You have Nebius, who's been in tech for decades. You have CoreWeave, who's the first ever really neo cloud and been with labs for a lot longer. And Armin's just too new to me. In a space that's moving this quickly, you want a company that has been established, that has the prowess, and I think that's where CoreWeave and Nebius will just kind of win and take a lot of stuff. But it's also people need compute, and IREN has it. So I think regardless, they're going to win. But for me, I think it's just management style, and that's really all it comes down to.
One other comment as well. Carl says IREN is going to undercut Nebius and CoreWeave with pricing with margin advantage of owning everything. The software moat won't last 18 months from now. IREN will have a much more leverage than it gives them credit. Nvidia IREN partnership will expand much more. 2 gigawatts. Sweetwater is going to be DGX flagship facility for Vera Rubin. But I agree, management has to get it together. Actually, I'm seeing a lot of IREN bulls basically saying that's the one weak spot is the management. Since you own both CoreWeave and IREN, Jose, if you want to comment on that.
Yeah, I would say, I mean, it's funny to me. A lot of my investments go back to Nvidia, and one of the things that Nvidia does is it makes sure to remove the hurdles for the AI market. One of the first things that they did in 2020 was create DGX Cloud. And it was to show the hyperscalers that this is how you build an AI cloud company. And you started to see hyperscalers do that. Once a hyperscaler started doing that, NVIDIA stopped DGX Cloud. It's like, I don't need to compete. I'm not competing with you. I was just showing you that the market is there. Then they started helping design servers. So your Supermicros, your Dells, all of these companies, they created something called MGX, which was to help standardize the server solution. If you're building a server for me, I'm going to show you how to do it the best way to increase your output production, and at the end of the day, help me make revenue. Many people thought that it was going to be bearish for the server makers, but no, it just helped improve how to do it. Then they started to do, now they're doing, I forget XGX or the new, how to build a data center. Right? How to build a data center. And things like this is to reduce that constraint. NVIDIA doesn't want there to just be hyperscalers running this. NVIDIA doesn't just want there to be CoreWeave and Nebius running this. And they know right now, one of the issues is this is a new market. Neocloud players are, not neocloud, Bitcoin miners are turning to neocloud players. But they need help getting there. And again, I go back to one of the main reasons I am an IREN investor is because I do believe NVIDIA is there holding hands, which is, in my opinion, extremely exciting to protect me from what are some of the issues that some of these management players might have. And I don't know if it's weird to think of it like that, but NVIDIA gives me the confidence that they will help. If they make a deal with someone, the last thing they want to do is be a laughingstock of, hey, you partner up with this player, and now this player can't even stand up a GPU, or they can't even help me. Their utilization time is extremely bad. So I agree with a lot of these. It's weird. It's like management is nice, but the real manager of IREN right now is Jensen. Obviously a joke, but it's like that's where it's at. It's like, sure, you have a CEO for the press, but the one making sure that you're going to be running up and the ones sharing a team to make sure that your GPU infrastructure is running well is going to be some other player out there.
Yeah, no, that I think that's a great way to put it. By the way, IREN earnings announced to be a day after NVIDIA. Interesting timing. Is that a coincidence, Jose?
I wouldn't read too much into that.
Okay, one more for you then on Jensen, and we'll talk about the macro, the other, of course, the hyperscalers. Jose doesn't like Nebius, but Jensen said Nebius will take care of you.
I don't
not like Nebius.
I think for me, owned Nebius before?
Yeah, I did own it. There was a point where it was like, it's like, to me, Nebius and CoreWeave are in the similar type of, obviously CoreWeave is bigger, but I feel like in a business stage, they're really close to each other. So for me, kind of like that concentration that Nick was talking is like, if they're around that same stage of a business life cycle, I'll pick one. For me, and that's where it was easier for me to go with the second player. And it's like, IREN is like, it's obviously in the same market, but in forms of where it's at in the business is a completely different stage. So like, it doesn't mean that I prefer IREN over Nebius. It's just because I feel like CoreWeave is my exposure in that space, I now will have to look in a different stage of a business, and that's where IREN fits it in.
Yeah, no, I had to pull it up. It's too funny to not. Let's then talk some of the macro stuff that's happening related to this. So Maybe first, let's touch on the bonds specifically because we've been talking so much with Nvidia. There was news. It feels like it was like eons ago, but it was very recent. The Nvidia had gathered together, of course, the godfathers of private equity, the Apollos, the Goldman Sachs, and so forth, announcing basically a 500 billion package that's available for financing with data centers. That was quickly followed by a 250 billion announcement by the Bank of America for a similar type of investment. That one's a little bit different because it's not just specific for data centers, but across the whole of AI infrastructure. What were your thoughts when you see something like this, and how does it impact some of the plays that we're in?
Man,
Oh,
I think.
yeah.
Go ahead.
Well, you start. Yeah.
I just think for me, the sheer numbers do genuinely scare me a little bit. Just seeing 500 billion, 250 billion, like at this point we're in trillions, and it's just I think I can't conceptualize what's going on here. And so my little urge, little devil on my shoulder is like, oh, this is circular financing, isn't it? But the more I think about it, it is great, and obviously you need to see some ROI. Like it actually will be circular financing if there is no ROI. Businesses are showing it, and so we're of course fine right now. But yeah, I think it's huge. I think it takes I think having it be its own asset class is an interesting concept I genuinely didn't think about. Um, and yeah, I guess I'll pass it to you, Jose, because I think I want to conceptualize a little more. But
No, no. I mean, I agree. I mean, when you hear these crazy numbers, it really you should have that fear of. I mean, I do. I tend to be very bullish in this market, but that doesn't mean I'm a mega bull. I try to I really do focus on the risk, and I also try to see the optics of why a bear would feel skeptical about the AI revolution. But then at the same time, it's like, if I, as a single guy who, I mean, I came from an engineering field, and I was engineers and I wasn't the best engineers. Like there's 10x engineers that I joke around. But many, if you're, I don't know if it's just in the engineering field, but in the engineering field, you have engineers and then you have 10x engineers. And those 10x engineers are the ones that completely, certain inventions wouldn't be made if it wasn't for that one engineer, even though there could be a team of 50 engineers. And I would say I was an engineer, a good one, but I was nowhere near a 10x engineer. And if the amount of stuff that I'm doing and not being a 1x engineer with AI technology, I can't imagine what these companies, and a lot of companies in the big tech space, they're filled with only 10x engineers. They don't have 1x engineers. What are they doing with AI? Like it just blows my mind, the amount of innovation that's going to come with this technology. So that brings me back to, hey, I'm just a perma AI bull, and screw all these bearish theses. Nvidia is just doing what it's done before. It wants to reduce the hurdle, that bump, and the bump right now is financing. It's the financing world. It limits how many players can be in the neocloud market. It limits who can buy GPUs. And now if you're able to showcase, and I think this is, I wonder if CoreWeave and all of these other players also, it helps out that they share that A100 is now living for 9 years. It helps build up this point where financing needs to change in this AI ecosystem. And yeah, so I obviously more compute, and even with all that compute, I still don't believe it's enough. And it seems like it's just an Nvidia play, but remember, these data centers are not just on Nvidia. There's the networking side, the power side, there's the storage side, there's the CPU side. If you decide to go with Nvidia or someone else, it looks like just Nvidia wins, but the rest of the semiconductor ecosystem is going to win dramatically with things like this. Yeah, so that's it before I keep going on my mega AI bull trend.
Yeah, this it felt like for me, very similar to you guys. Like I try to be, bullish where I feel it's warranted. When there's hey, there's also some concerns here. I was like, hey, it's good and concerning. And my concern is, it felt like this is like a too big to fail type of moment. That we went from if AI falters, if AI fails, yeah, GDP takes a hit, and it does have ripple effects as well. When we're starting to dip into private equity, and then you're looking at who actually owns that. So like the lenders are funded by like insurance and annuities, and then you're hitting like boomers retired. Like if I don't think it's going to, but if it fails, that cost of failure has gone from there's a price to pay and it's painful to extreme. And it's
Isn't
kind
it?
of nice.
Sorry to cut you off, but to add on, isn't it like 20% of the S&P? I saw something on CNBC today. Like 20% of the S&P growth is from hyperscaler CapEx spending, or some crazy figure that like I can find a quote for it, but I'll try to cut you off. But it is starting to scare me where it's like you said, it's too big to fail. Where it's now we're talking about trillions. We're talking about 10% of GDP is now going towards AI build out and more probably. And that's where it gets a little concerning. So sorry, go ahead. I didn't cut you off.
Yeah, and I think it like it's this is one of those things. Bears, a lot of their points are just like dated. They don't understand. But this is one of those where they're like, hey, we need to pay attention to this high, and like that is fair. That is very fair, especially after this. But I will say, you know, there it also showcases like these are you got two different sets of audiences. You have on one side many of the brightest minds that have ever been in business, and they are building out. They're seeing these things. Some of them are very aggressive in the way that they do CapEx. You know, the Mark Zuckerbergs of the world. Some, I don't remember his name, but the CEO of TSMC, very conservative, very cautious, and they're not just talking to their customers, but their customers, and they're like, we have no choice but to build out this CapEx. The demand is real, it's durable, and yes, we understand why some people might have concerns or questions. We do too, but what we're seeing, it all lines up. So you have all the business leaders, you have the big money, including Citadel now, which maybe we'll talk about Leopold and all that if we'd like to. That feels like it's like 6 months ago. That happened in the last 3 weeks. It's crazy. But you have big money guys, big business guys. You have government as well. The EU, of course, is adding 10 billion in public money, which is the equivalent of 500 billion from the United States here from Nvidia and all that. Not quite really, but so yeah, it's exciting, but it's also like, man, I really hope that the Bears are wrong. I'm fairly sure that the Bears are wrong. But if they're right, boy, that is a painful cost. And so, you know, there should be some skepticism here. I think it would be unhealthy if literally every person on the planet was like, hey, this is awesome. Then we might really be looking at something that's painful on the other side here. The other thing that like all this has been one of those issues with it, not just with CoreWeave, but I think especially with CoreWeave, that we saw those bonds, the bond yield that they have to issue debt against, which cuts right into the margin, spike into the 11 point something percent range. Now it's fallen down, it's in the 9%. But you know, they're not the only ones that are taking on debt as well. And the higher that cost of debt is, that eats right into margins. And so this is on the other side to supply demand economics, when you have a lot more supply all of a sudden that's available out there. And certainly those that are close to Nvidia are going to, I think, likely have the availability of that the most, because they're like, hey, you're buying our products, we're going to make sure you're able to buy this. But yeah, to your point, Nate, circular finance arrogance got strengthened through this. So
yeah, it does start to worry me a little bit, and especially when I feel like it's all happening so fast. You know, if this is spread out over the course of years and years and decades, but it feels like in the past 12 months, we've seen commitments in the trillions at this point. And it's just like, where, you know, when does it stop? And how big does it really get? And then how much, like you said, how much of the GDP is now driven by this? And then it becomes, okay, you know, this used to be a percentage of GDP. Now it's 20%. You know, now it's like, that's worrying if it does fail. Now, I don't think it will. I'm very bullish. But yeah, it does. The numbers to me are just so staggering. And I just think I can't conceptualize it is honestly part of it. But yeah, like we're going to see in probably 2027, 28, some sort of $1 trillion deal from Nvidia and all the hyperscalers. Like, it's just going to be something like that. And so, yeah, it is a little worrying sometimes. But
yeah, the scope of it, so like, oh, go ahead.
Is there anything that would make you feel like, what would make you feel less worried? Because I mean, even I think for someone who's extremely bullish in this, like myself, is like, I still can't imagine $500 billion, right? At the same time, if I'm imagining, it's like, I'm probably not imagining the correct amount. And if I was to put that in like a physical form and be like, this is really 500 billion. But like, what would, is it more of like some technological innovation? Is it some earnings report? Is like, what would be like you know what? Now and obviously you own Nebius, so you're extremely bullish in the
Yeah.
AI space.
And also, Jose,
Um,
just so you know, for
yeah.
context, I am all in Nebius. So
I saw that. I
I
was reading comments where it was
okay.
like 99%
Yeah.
that. So I mean, obviously for you to be feeling comfortable in being
Yeah.
completely in Nebius, it's you really need to believe in this AI story, because that's, I guess, what drives the demand imbalance in this industry and protects a lot of the pricing and margins. So like
For
even
me, so
yeah.
to answer your question, for me, genuinely, it's very anecdotal. So I actually work in a very large enterprise that works with enterprises that are adopting, our agentic platform that we have at my company. And so for me, anecdotally, it still feels very early, and so that's what allows me to be bullish, honestly. And even their conversations of, I'm having conversations with enterprise customers, but are still trying to understand what tokens even mean. How to gather? How do I figure out my consumption thresholds? Like this is where I'm like, oh my god, we're so early, because I'm thinking about these massive hyperscalers and like 40 to 50 agent to agent platforms where I'm dealing with enterprises that are literally just like, what are tokens? No, but I don't use leverage, and I don't use call options, so it's
Good
not
for you, man.
either way. But yeah, I think for me it's a lot more anecdotal. I think I'm honestly using that as a large part for me as my kind of bellwether and my gauge of where we're going. If we do start to get to a point where most of the enterprises are coming to us and being like, we don't like this anymore, we're just done adopting it, then I would get worried. But the fact we're still so early in the demand on our side for how much enterprises need us to help them and enable them, that's for me just anecdotally like, okay, we're still way earlier than I even anticipated, and it continues to feel that way every single quarter. And so for me, I'm using that as like my kind of like my anchor of when I see change in my work life, then I'm going to start thinking about my investments. But until then, I'm okay, you know. So
Yeah, for me, it's very similar, Nate. That would help kind of calm, not a lot of fear, obviously, because of the way I'm positioned, but there is some. I'm not just going to be a blind bull and just ignore every plausible bear point and what can happen on the other side. But I think just time, because we have projections, we have this is what we're expecting. This demand is here, and it's showing up. But when you're talking about over the course of a week, $750 billion being freed up to be deployed in data centers and some AI supply chain, it's such an unfathomable figure. It's like, okay, yes, things are accelerating rapidly, but that is a massive number as well. So time is needed. But so like one of those reads, there's a lot of reads that's showcasing that the demand looks like it's durable. It looks very much like the internet in that there's times where it will grow faster, times where it will go slower. It will never trace backwards. But I've been working on this article. It feels like forever. It was on pause this week because too many earnings calls and everything. Where I'm going to put it on Artemis there, where the AI wave that's happening is sooner than we think, and it's far more violent, like in a positive way. And there's a lot of pieces to that, and I'm kind of glad I waited because I can put in the A100 piece there, which is very important into this. But one of the most interesting reads that I've heard on this, and Nate, I think you've heard this, the Matthew Prince, the Cloudflare stuff. So Cloudflare is positioned to see 20% of the world's internet traffic. And they've been saying this for a while. So back in, I believe it was May, they said, for the first time ever, non-human traffic has surpassed human traffic. And it's like, well, that's kind of cool and kind of crazy and weird. And then they went a little bit step further. They said, over the next 5 years, we project that agentic, that non-human traffic to increase 1,000-fold. 1,000-fold. Now, that's not all data centers, but it is very much tied into it. You don't run agent. You need an inference to run agents. You need to be training these to be able to run the agents as well, and these LLMs. And so, like, maybe it's not 1,000-fold, but like across the board, the people that are seeing the most data, they're seeing the most evidence, but we're just a little bit too early for me to have like complete and 100% confidence. Like I can't do what Nate does. Nate, a lot of respect to you. I can't go all in on CoreWeave. I can't go all in on Nebius. I can't do like I did 90% Palantir back in 2022, and now I'm like, I guess I'm old because I'm 46. I'm like a little more conservative. 20% is about as big as I can go there. So yeah, that's just where I'm seeing it. We need more time, but I think maybe in a year or so or 2 years, we're gonna get better and better reads on this. The data will keep coming in. If it keeps going directionally this way, the bears will get more and more quiet. There will still be some. There will be new bear talking points. There's always bears. Used to be bears sound smart and bulls make money. I'm not sure like with some of the things that we'll talk about some of the bears next that they even sound that smart anymore. But for you, Jose, is there anything that would beyond what we've mentioned that would help set your mind at ease with some of those maybe legitimate bear fears out there? The cost of failure.
Yeah, I feel like for me, I don't know how much fear I have. Like I understand the fear of this AI market, and it's not like I don't understand the risk, but I just can't see it happening in the next 12 to 18 months. And I think it's very similar to what Nate is saying. To me, the biggest bearish time is going to happen when I no longer think AI is innovating at rapid levels where its tokens is gonna because right now you're having a lot of things. You're having GPUs becoming more optimized at token generation. You're having AI companies get better at designing AI models, which is also optimizing your token output. There's various ways. Memory is getting better. There's so many things happening at the moment that is reducing the cost of tokens. But at the same time, I think AI innovation is happening so quickly and adoption is still so early that the demand for tokens is going to continue to outstrip the optimization happening in this stack. The moment I believe I'm going to be bearish in this space is when I believe that segment is no longer heavier than the optimization space. And one of the I was just private messaging here, Nate, and it's like one of the things I miss about being working at a firm was that I was in there in the technology, not in AI, but I was able to see what the engineers, what other enterprises were doing, what other players were doing, and it was very helpful. Now it's like my brother is in software and data analytics. I have some friends that are still engineering, so every so often I message them. I'm like, hey, what are you doing with AI? And some people are like, AI, we still like. I come from a world where it was I dealt with contractors for national defense, so it's like there's certain things that we still can't do because of some of the safety nets and some of the clearance opportunities. So to me, when I keep hearing that, when I hear from my brother, we're still not doing that for this type of software, it's like everybody thinks AI agents and software coding has 100% adoption rate already, but it's not. It's like maybe you're using it to push and pull certain things. Maybe you're doing to create certain things, but not every software engineer is using AI 100%. I would say the number is a lot lower than that. So when I start hearing everybody in my software friends list, in my engineer or wherever talk about AI, that's all they're doing, maybe that's when I start to get a little bit more scared.
Same thing I've seen, Jose, is we have a lot of government enterprise customers that are struggling because of FedRAMP. Hard for us to get approval for our agentic platform. And so they're still running on Excel. I've worked in the consulting space before. They are still, some small businesses and medium-sized are still running on Excel. Like, guys, that is a 25-year-old, 30-year-old platform, probably longer than 30 years old, actually. And they're still using it to run their business. And we're talking about, like, we're so early. And I do think BCAP put it in the comments, like the real bottleneck is human adoption. And that's just a natural progression for all technology, whether it's, everything. So.
And it's crazy that even with that, even with that bottleneck, you're still compute constrained. So imagine when human adoption doesn't become the bottleneck. Like, what is what are your needs in compute at that stage? And the other thing is, even a lot of these, another indication for me where I would be scared is intelligence is not instantaneous just yet. And obviously, eventually, there's always going to be some latency because you're doing tool calling, you're doing all this. But there are certain tasks that I do where I run some form of agent workflow that takes 1 hour plus. Until I see that task take me maybe 10 minutes is when I no longer have a task that takes that long. It's because it's telling me these AI labs are now able to give me faster tokens at a faster intelligence token or intelligence token at a faster rate. It's because they're no longer compute constrained. But I'm not seeing that. I still have certain tasks taking me an hour, some of them 40 minutes and so. So a lot of these things are holding me back from saying, man, is 500 billion really that crazy?
Yeah.
So on the human adoption part, like that is one of the points that I also make on this massive wave that is coming, that I think we're still all, maybe even us bulls, are underestimating. My daughter, she's in 8th grade, and we decided to not go with the initial school that she was enrolled in, but the class that she had to take, and every single person in 8th grade had to take, is applied AI. Like, and what's
Really?
basically happening?
Interesting.
Yes, yeah. And
Interesting.
what's basically happening? It's not every school, it's not every school district, but there's a lot of them. And this is 8th grade, but especially in college level. And I worked for a college, like 5 years ago, 4 years ago, whatever. But you're seeing this adoption curve accelerate, and it's very similar. I'm an old guy in the room, so I'm 46, and I still remember when I was like 3rd grade or 4th grade. That was kind of new, but the whole thing, we shifted from like penmanship to typing, and now everybody takes a typing course and they need to learn how to type. But there was a moment when I was like, wait, what are we doing? Teaching these students how to type, like on keyboards? No, actually on computers. And this is what's happening with AI. So these young people, by the way, a lot of them are very skeptical with AI. It's a weird thing. And I'm still struggling to try to understand it with my own daughter, and with a lot of people there that I'm connected to, like in the community, in the church, friends, kids, and stuff. But regardless, like it is coming. These young people, the applied AI, by the way, the way it was is it's not just you sit down at a desk and then you like play with AI. It's here's all these classes that you're taking across all these different disciplines. Here is valid ways, legitimate academic ways that you can use to be able to accelerate and do more of what you're doing. Here's how you can use it to build. Anyway, yeah, I was like, applied AI.
That's interesting.
Yeah, it's very shocking.
So are they just learning concepts, or are they like learning how to use LLMs, or like how far does it go?
From my understanding, and again, she didn't end up starting there. She would have started this Wednesday. It's first like, what is AI, and they mostly know, and second, just so nobody's left behind, because they have to start there, introducing the LLMs and then how you access those. And I don't remember which one they're using, but they're using like a very specific model. They talk about other models as well. They talk about all the ways. Like in 8th grade, they're also learning coding. That's not something that's necessarily new, but they like for the AI, they're like, we are going to use AI for coding. For AI, like within English, they're like, here's how you can use it for English. And what that is basically, I don't know exactly, but I finished my dissertation, got a PhD earlier this year, and there's very legitimate ways, like at the university level, where they're teaching you like, you can't use it in these ways, but you can use it for these ways. And I'm the world's worst at editing, and I'm the world's worst with coming up with titles and subtitles and everything. So instead, I'm like, here's this entire section. Rather than me spend 30 minutes to try to get the perfect title, suggest 10 for me. And it's like, okay, this is all your content. There you go. Here's these 10. Okay, I like number 3. Let me tweak it. Boom, done. And then going through like with conclusions, for instance, and I'm sure that this is probably something that they use it for, because they're beyond 5-paragraph essays in 8th grade. You want to make sure that your conclusion matches your content and the introduction as well. And so what you do is you take the entire thing, you put it in there, and you're like, okay, here's the body of whatever. Here's the conclusion. What did I not really hit that I should have brought up from the context? And so it's kind of like a proofreader there. Mathematics, same thing. Like when you don't understand a mathematical concept, you can actually build something or have it explain exactly what it's doing. It's not going to it and saying, solve this problem for me, don't do the thinking, but instead, help me understand how this actually works. With science, they apply it in the same way. I don't know. This is a speculation, but it was biology, some sort of like something biology. I don't remember the class. And even within that, they're like, okay, here's how you can actually visualize some of the data. Here is, if you don't understand a concept, I remember one of the things that they mentioned was in preparation for some of these tests, you basically are like, here's the book, and they've put the data in there with whatever element that they're using, so they have the memory. And they're like, I want you to generate a quiz based around that, because we have one coming, and then it'll quiz you and you'll put the answers and it'll give you feedback. And so all these different ways. What it's basically teaching them to do is don't think about AI as just a calculator that solves your problems and that's it, but instead figure out how it helps you do these classes better, think better, learn faster, build more, and move on. And it's like, that's freaking amazing. And it's not like this is a free school, it's a public school. It's you know, so
I'm gonna say I saw the same trend with my fiance. Like, she hates technology. She's in a doctorate program, and she now like cannot do schoolwork without Notebook LM. Like, she just loves it. And it's pretty, because I remember introducing like ChatGPT to her a few years ago, and Gemini, she didn't care. Then she's in school and she's like, how do I use this stuff again? And now she's gotten a lot stronger at it, and she loves it. Like, she will not study without Notebook LM. So it's interesting to see the trend, especially in education too, and for people that aren't tech focused or tech forward, and using these tools and products. So
yeah. Let's talk bearish bets as well. So we talked about Jose, since you're a CoreWeave shareholder, did you see Shkreli, Martin Shkreli, come out and talk about CoreWeave in a short?
No, I have not.
Okay. Yeah, here's what he posted actually just the morning after CoreWeave's earnings. He said, CoreWeave is a short, debt is too large to generate free cash flow, CFFO is normalizing, WC is too small, 1 billion new GPU cohort is unpredictable. You think B200 will sell out for the next 10 years with zero process improvements, TPUs, ASICs, etc. Great product and people, but enough is enough. Just because A100s are re-renting doesn't mean anything. That was way before AI, the CapEx boom. Now we're overbuilding, and it always ends the same way. This is like the global crossing. That's a reference back to when the internet was just dawning, and they were laying down these cables, by the way, in the ocean. And they went belly up, and of course, it ended up being used, but by the companies that bought it up in bankruptcy. I really like the people there, but they're drunk on leverage. Didn't we just learn about leverage? And of course, lots of great replies to them. So is this... what part of this? Yeah, go ahead.
I just think it's very simple for me. When people compare it to the dot-com bubble, we're talking about physical infrastructure for physical demand. We're not talking about physical infrastructure for intelligence. Totally different things, and that's my end of story. Like, I'm sort of getting annoyed now with the Burrys and Shkrelis of just like, oh my god, we're overbuilding. And it's like, it's not the same thing. There was a physical demand side too, and it's just, I don't know. We're now talking about digital demand and intelligence. I mean, there will be a point where there's a ceiling for sure, but there's so many signs that show the exact opposite of his point and perspective, in my opinion. So, but I'll pass to you, Jose.
Yeah, no, I mean, I agree. I think, all GPUs are turning on and being used at 100% utilization. If not, you wouldn't be seeing this pricing. I mean, even memory companies kind of tell you that, right, in prior cycles, it was more of just a volume that was happening in growth. But this time, it didn't mean that every storage system that they used to sell or every memory would be working at 100% utilization. There are memory companies in prior conferences that said, when we sell this storage solution, right off the bat, it's working at 100% utilization. So there's like no dark memory. There's no dark GPUs like we saw in the fiber state. And it's mainly because of the recent Nate states that this is the intelligence coming out. Are you going to tell me that if we don't have all software engineers adopting AI solutions, like they're just going to stop out of nowhere and they're going to stop using AI tools? What happens when, I mean, we're kind of getting early angles of this, of AI hacking systems. And the only way you can defend the AI is by having faster AI and better AI agents to protect yourself from and some form of AI. Like, you've opened that Pandora box and you can't close it. Like, you can't say, oh, AI is no longer, like, you can't have AI hack systems. Like, that Pandora box is open. So if AI is going to be hacking systems, you need to have just pure compute that's going to be focusing on defending that solution as well. And then you have other avenues, tool callings. Like, one of my biggest, I think the market is going to be scared of software in the future, because human interaction with software is going to be completely different. Like, I don't think I feel maybe it's exaggerated, but eventually people are not going to know exactly what software solution they're working on. They're going to say, hey, AI agent, I need you to build this and this. And that AI agent is going to tool call on the right software solutions. So there's going to be a time where people are going to be like, I don't know what software my business is using. My AI agent does all that, right? I don't know if there was we see in the gaming world, Unity and and Unreal Engine. They have MCPs that now you connect your cloud or whatever. Hey, build this on this thing. And this is just early innings. And those are just two software solutions. There's the chip design world. There's the simulation of aerodynamics. There's the fluid dynamics world. There's the power world. Like just on software, on just simulations, the amounts of tool calling that can be happening to generate or build or again simulate something is insane. Then in the health industry, like I hate to be that guy, but it's like it really in just the way we talk to software is completely shifting, and we are really early. And at one point, it's gonna look scary. It's gonna seem like AI is really eating the software space, but it's just the way we interacted with software back then was keyboard and mouse clicking. The way we're going to interact with software in the future is going to be through an AI agent, and that AI agent is going to need to use all these CPUs and GPUs to be able to do everything we need it to do. And for me, the A100s, I actually think the Blackwells are going to have a way longer lifetime than the A100s, because the Blackwells introduce something different than all the other generations: the ability to connect 72 GPUs together through NVLink. Where in the A100s you only had I don't forget with the A100, with the Hoppers you had 8 GPUs, I believe. With the A100s, I don't know if it was 8 or 4, but that ability to have 72 GPUs working as a coherently one GPU through it's a game changer. So I if we continue in this dynamic, I believe the Blackwells are going to surpass the life cycle, as long as hardware physically they can withstand the amount of time of being 100% utilized. I think they will last a lot longer than the A100s.
Yeah, I and of course they'll shift from like training to more inference and workloads and everything. But yeah, the one point that I do think that Shkreli had, or at least it kind of showcases, oops, I guess I removed that. Now I removed you guys. Sorry. Is we, unlike Nebius, where they're like, hey, payoff periods, which maybe you're just looking at some recent data and everything. We don't have that. We don't know that for sure. Now he's wrong with that. CoreWeave needs to sell out B200s over 10 years. That's absolutely ridiculous. And I think he's not legitimately making that point, but he is using hyperbole there to strengthen his argument. But regardless, like, I think he's very underestimating demand, but it would be great if CoreWeave was a little bit more like, here's what the payoff periods actually look like. Here's what we're expecting as far as when profitability comes. And I really hope that either in the fireside chats that they get pressed on those things so that they answer, or that they come out with some of that information in the next earnings call, just to set that, I would like it as an investor too, not just to put the bears to bed. So I thought Shkreli's argument was wrong, but I thought it was more well-reasoned than Burry's, just because Burry's was, well, why don't you tell us, Nate? Because he's not shorting CoreWeave, he's not shorting IREN, he is shorting Nebius.
Yeah, shorting Nebius, yeah, which is, I think he said verbatim, this quarter is the top of a boom, which is, to me, comical. And I love the fact that he shorted them before this blowout earnings, and then Nebius just like blew to 250. And he doubled down. Of course he did. And then also, I think it's just, I genuinely do believe that at this point, to me, honestly, a lot of the commentary does just feel like sarcasm. And I just can't tell if he's being serious. Like the specific comment of pound is worth less than $1 share, like, there just has to be attention grabbing for a Substack. Like, I don't get it. And then, like, at that point, how can you be taken seriously as a bear? Like, at least Shkreli, like you said, is showing at least maybe some sort of relatively cohesive statement, and like I respect his conviction to be the other side of the trade. But like Burry is just kind of just like gallivanting around and just saying this Nebius earnings is the top of the boom and pound is worth less than $1. Like, it generally just sounds like a joke, and people still take it seriously for some reason. I just don't get it.
There's more to it than this, but he kept recycling the depreciation argument, which, after the especially the CoreWeave comments, the A100s, but Nebius as well. It's not like a specific, like, I think Nvidia hardware might end up being longer lived, in part what you said with Blackwell, the CUDA software. Now they did a great job talking about that effect as well. But like, it's one thing, if this was a couple of years ago and they're starting to extend the depreciation cycle, but we're not seeing these renewals, we're not seeing the hoppers at constant prices or even higher over the last year, but we're seeing all of these things. He's just ignoring data at this point, versus 2 years ago, he could have said, well, Jensen says this, but I think that. And fair enough. This is hard data. When people are actually paying for the product and signing these contracts, it is no longer speculation, especially when it's not just one company, but company after company after company after product. So at this point, like, I don't know if he is just plugging his ears and saying, I don't care what you say, I'm just going to keep saying what I'm saying, or if he's just throwing stuff at the wall to see what sticks to knock down the price. It's strange though. But I thought
Yeah.
Shkreli's was, even though I disagree with both, at least, there was some reasoning and thought there. And there's some things like, yeah, CoreWeave needs to talk about a little bit more. Yeah, the depreciation thing.
Yeah, I feel like the depreciation. I feel like if he said that a year and a half ago, I would have been like, yeah, okay, we haven't seen significant things to prove otherwise. These two earnings from CoreWeave and Nebius literally, I feel like, is the most obvious proof of no, you are literally just wrong at this point. With the A100 conversation with Nebius saying the payback period, like both of those coincide to just be like, okay, this whole 2-3 year GPU cycle is just wrong. And yeah, I just at this point I'm sort of just annoyed that he even still makes headlines. Like at this point, he's just saying the same thing and making no point, in my opinion. So
yeah. Three things right quick. Maggie Rodriguez is a new member of one of your guys' channels. Not sure which, but thank you,
Maggie.
2 Jules from Good Day GD, and also Andrew. Thank you for the $5 donation for 3 future AI millionaires cooking on this live stream. Thank you guys for your support. We're going to wrap things up here in about 20 minutes. So let's move on and just hit 2 more notes. Well, I guess just real quick on the Texas pause. I don't think we need to talk too much about this. I'm here in Texas. Governor Abbott is Republican governor in a very Republican state, and yet the polls are pretty close. And so really the pause is not the same as the New York moratorium. All it is with ERCOT, which is their big energy hub there for the government, has received a lot of requests to hook up to the power grid. And so it's between like some of these being double, triple, quadruple requests, like the same thing. They're like, hey, let's run an audit, make sure that that's fine, as well as check as far as water usage, environmental impact, community impact, and so forth. But I think even more so, like, it's a little surprising that Texas and a Republican governor would be like, hey, let's pause. But it doesn't stop existing data centers. It doesn't stop those that are already permitted. So IREN and CoreWeave are just perfectly fine. No issue there at all. And it's 6 months. And so really what I think this is just kind of showing the political winds that are there that we should be paying attention to, because this could cause... Yep. We might see more moratoriums or attempts at moratoriums in other states, and this become an increasingly large talking point as we enter the election cycle. But yeah, if Abbott is reelected or not, that 6 month pause, I think after it's over, is be like, all right, we're good, off to the races. Would you guys like to talk about anything related to the hyperscalers? And I do for sure want to talk a little bit about SpaceX. So all the hyperscalers reported, and just real quick, I'll just show. Oh man, I did it again. I'm not used to being the driver, so I need more practice. All right, this right here. Yeah, this was my earnings review on them, the capital expenditures. And so the one thing that I thought was interesting was, especially with the CapEx and the ROI. So every single one of these, except for, I felt, Meta, did a great job of talking about the ROI and what they're seeing and how long they expect the cycle to be. Meta kind of faltered a little bit more. Meta, I thought, would have raised their CapEx more than they did, because they've been talking about Meta Compute for the longest time. And initially it was like, if we got excess, we can sell it, to we will sell it. And we love these long-term contracts because we can sell ours at higher prices. And then it sounded like they're getting in this big, and they're like, okay, we're going to raise the lower end of guidance by $5 billion. Versus all of the others. By the way, the Microsoft change was just an accounting change, not something that they're like, hey, we're taking CapEx off the table. But some pretty big raises there. Like Google Cloud is growing insanely. Amazon and Jassy had a ridiculous comment. I started earlier just so I didn't forget. AWS reported a record contracted backlog of $496 billion at the end of Q2 2026. And Jassy said, AWS is going to be $1 trillion annual run rate business at some point. Anything that stood out that relates to data centers and what's happening with AI, and of course CapEx and the way the market is perceiving it, that you liked, that you loved, that you thought was interesting?
I mean, to me, one of my favorites was Amazon. I really do enjoy the aggressive play. in this. And I feel like Amazon was one of the best at. I feel like every other player out there in those came out and said, in one way or another, not direct quote, but if this AI story isn't real, we can just stop buying GPUs. I think that's what Microsoft said. And it's pretty much we can slow down. And or Meta said, if we don't need for internal usage, we can sell this compute. So it's like we had a goal, but if it doesn't work, or if we have a plan, or if this plan doesn't work, we have another option. I felt like Amazon was the only one that came out that didn't have a plan B. It was like, we're investing hard, and that's where we're going. And this is coming from one of the players that I felt a year ago or a year and a half ago was really slow, like didn't accelerate in this AI wave, was kind of slowing down. And then it just, in the last few quarters, we kind of just seen a change to that. But they came out and said, AWS could be a $1 trillion business. We've done this before. Our AI investments are going to go extremely heavy in 2027 and 2028. So to me, that one was my favorite. It gave the most confidence, and I think other management should say that. That was my biggest take, but I still think all four said the same thing, that we are compute constrained in this, and that we should expect 2027. I think Google mentioned meaningful more CapEx in 2027. I think Meta said it in a way where it was like, the world is underbuilt in AI and it's not prepared, again, paraphrasing, but it's pretty much not prepared for the demand that we and other players are going to need in 2027 and 2028. The only one that I felt was a little bit hesitant in the way they presented was Microsoft. I felt like that one was the slower, the one who had the most hesitation, but overall I thought it was bullish for the industry.
Yeah, I think for me, Amazon definitely fired me up. I felt like he just came on and was just like, here's our ROI on servers and networking. We're gonna be a $1 trillion AR business. We're gonna keep pushing forward. And then I was like, ooh, what does this mean for Nebius? If Amazon AWS can get to $1 trillion in revenue, like even if Nebius takes 5% of it, we're talking $50 billion. But anyway, I just think overall though, yeah, it definitely made me the most. Amazon definitely came away with the most bullish tonality. And I think Jose, do you remember which firm guided for Google being like, oh, they're going to do like 370 billion in CapEx or 275 billion? Was it like Bank of America or someone basically came out like a couple days before earnings and said, we think Google's going to like almost double their CapEx again next year. And Google then came on the call and said, we're going to have significantly higher CapEx, whatever that means. And so, yeah, I think overall the trend is still bullish. Now, obviously, the rate of growth of the CapEx spend will slow down. This is not going to continue. But it didn't seem like it's going to slow down much yet, which is what's the crazy. Because I expected much more of like, okay, we're going to, 10 to 20, 30% a year. It's still like, we're going to grow significantly next year. And it's like, oh, okay. We're going to be $1 trillion revenue business on AWS. It's like, okay. We're not slowing down, and we still have a lot longer to go. So I came away very bullish, and I think CoreWeave and Nebius even just sustained the NeoCloud bullishness even more. So,
if I had to say also one that also caught my attention was Meta, and I think Meta, I think Mark Zuckerberg is really confident in his plan, but at the same time, I also think he was trying to make shareholders happy. And the reason I mention that is I think a lot of his shareholders and a lot of the market wants him to sell compute. I think they because it would, and I think that's one of the things that Meta lacks is they don't have a cloud business, so they can't really show, oh look, this crazy growth in it. And I think the market believes if they show compute sell somehow, it's very bullish for them. But Mark Zuckerberg said that's an option, but we believe the bigger opportunity is selling intelligence. And in this AI space, there's 3 ways to make money. The first way is you sell the infrastructure itself, kind of like what the NeoCloud players are doing. The second thing is you have a product that you can sell at a higher price than you rent out GPUs, and these are the AI labs, right? They rent out these infrastructure, but that's because they know the tokens that they sell are higher margins. And the third business is the best business of all, is having an AI model that sells. That's the important part, an AI model that's competitive, and having that AI infrastructure as well. And that's where Meta wants to go. And I don't think the market believes it's going to go there just because, right, Llama failed pretty much. It was miserable. But what we're seeing with Muse, or I think it's Muse, or the new models that they're releasing, is showcasing some improvements there. So while the market wants them to sell compute, I think Mark is saying, just give me a few more quarters and you're going to see the opportunity that really lies with having the compute and having the intelligence behind it. And obviously that comes with risk because of the execution that has happened in the past. But it's one that gets me like, let's see how this plays out for Meta.
Yeah, I think that they bought themselves time with the meta compute, but it really did surprise me that I was like, oh man, they're going to really increase CapEx because they're going to go for it. The way that they ramped up into the earnings call, the talk, and they're like, yeah, lower end, we're going to raise it by $5 billion. So I agree with you, Jose. It was more about optics and pleasing shareholders. And yeah, they will sell some of that capacity, but the read across the board with hyperscalers, I think, is really bullish for the neoclouds just because it's showcasing the demand. It's showcasing that these guys, they're not just covering their eyes and covering their ears and just trying this blindly. They see a huge swath of the data. I mean, you can even see like the real numbers on the clouds. The Google one, in part, it was fueled by, of course, the Wix acquisition, but not Wix. I can't think of the name of it. The cybersecurity acquisition they had for the cloud. But phenomenal numbers, phenomenal growth, all except for Meta. I think did a great job handling the calls, handling the guidance, and talking about the ROI too, which really helps the space. And then Amy Hood kind of saved things with talking about that at least one of them is going to be free cash flow positive. But I think like really like if people are looking at free cash flow for the hyperscalers and especially the neoclouds right now, it's during massive CapEx buildup. That's just the wrong measure. Lastly, we just have a couple more minutes. SpaceX, while it's not a hyperscaler, they talked a lot about entering this data center trade. It's a little different with SpaceX because initially you're like, oh, these guys are sending rockets, and they bought Cursor and they own Grok, and wait a minute, now they're a data center company as well. So entering that earnings call, like they said some ridiculous things in terms of what they plan to do and in terms of what they're launching. They talked about the exclusivity with Nvidia and expecting to have a significant amount of Vera Rubins delivered over this next year. I guess, did you guys hear the SpaceX or see some of the comments? And did that shift anything in your mind or just further validate what's happening here? Are you concerned about them, in other words, as a competitor?
I think right now the demand is so insatiable that it doesn't matter, but it does add a little bit of concern where you see more and more players that are like, oh, there is a lot of money to be made, and obviously that then increases supply. And so I'm going to be monitoring that a lot because I do think we're seeing more and more players like a Meta, like a SpaceX, and maybe even at some points we're seeing, Nebius an asset light model where even more players like massive financial institutions are like, hey, we can make some money on this thing. Let's work with Nebius to do the asset light. And I just think, yes, at some point it could become some sort of competition, but I think right now it's just the demand is crazy until at least 2028 that I'm not really too worried, but I definitely will be continuing to monitor it and see if it does slow down, or if we do see like another 5 new players next year and 5 more the next year, then it becomes a little worrying where we're talking about like 20 neo clouds, and offering compute. So yeah, I'll definitely be continuing to monitor, but for now, not too worried.
Yeah, I very agree with Nate. Right, it's something to monitor, and to me, the biggest takeaway was they did mention that they're planning on building or getting up to 5 or to 10 gigawatts by the end of next year. And he said actually closer to 10, so let's just assume 7. And he wants to end this year with 2, so that's 5 gigawatts at that sort of midpoint for them. An exclusive Nvidia, and Nvidia has mentioned that for them, it's about $40 to $50 billion in revenue that they collect per gigawatt. So if you just do some quick napkin math, but there's probably some obviously some discounts and happening here, but that's 5 times 50. It's $250 billion that, in theory, they're planning on spending on Nvidia next year. That's one customer. Like, if this one player is doing that much, like, what is going to be the CapEx for Meta or for Google or for the other players next year? And, like, what does that deal with demand for the rest of the AI and data center ecosystem? Because if you can only build X amount of chips, and these companies need that infrastructure, how on a daily basis, how many times are they going to be calling Nebius, CoreWeave, for all these players to kind of give them that compute that they need?
and air test systems for that wafer level burn in, increasing that throughput. So had to get it in there. Yeah, it's going to be interesting to see how that plays out. Like this was a very bullish so far. We haven't seen Nvidia yet, and of course they report kind of as an exclamation point to a great earnings season. But a lot of validation for what's happening in the space. Let's maybe end on this, not necessarily on like specific price targets for specific names, but these have moved around so much. We've seen earnings for 2 out of the 3. Out of these, like, do you think it's? Let's take it one name at a time, and we can each weigh in whether we're shareholders or not. So for IREN, do you see that as overvalued, fair valued, or undervalued? I actually think it's undervalued right now.
Yeah, I think undervalued.
Yeah, I agree. Investing, but you kind of that risk if they mess up somewhere because they're very early. If they mess up somewhere, that undervalued to overvalued can shift pretty quickly.
Yeah, I can. Okay, CoreWeave has seen massive moves more than anything over the last 2 weeks or like last month. Crazy. Undervalued, overvalued, or fair valued. We'll start Nate, then Jose, then me.
I think undervalued. I'll say the same for all 3, but yeah.
Yeah, same. I think for all, it's undervalued, and to me at least, CoreWeave and Nebius are, in my opinion, $100 billion companies. Not maybe next quarter or next year, but long term, I don't see why these don't become $100 billion competitors. So high volatility into space, but undervalued for CoreWeave here.
Yeah, I think CoreWeave over the next 5 years might do a 5x, so undervalued. And then Nebius, yeah. I think we all agree. Yeah, Nebius is closer to fair value, but yeah, it's undervalued. Given what, like if before this earnings call, I would have not said that. But man, like the auction stuff, the Vera Rubin, and like one thing real quick, with SpaceX acquiring a bunch of these Vera Rubins, it's really like it's Nebius, it's CoreWeave, and maybe IREN, Microsoft has some too, but like SpaceX. Those are the 3 that have meaningful supplies of Vera Rubin. Yep. Guess what that means? Pricing power, baby.
Yeah, and Nebius just validated a few weeks ago the Vera Rubins as well. But yeah, I think Nebius is more undervalued this quarter than it was before the quarter, and that's why I'm still buying it. I'm still buying it 250. Because I even I don't want to get too much into it because I'll yap for too long. But I think that the market doesn't understand how much Nebius is going to do next year in ARR. And I think they're probably gonna be doing 25 to 35 billion in ARR next year, which would be a 3x from this year's ARR again. So, yeah, I think they're all 3 undervalued though for sure.
Yeah. All right. Let me just end with this here, just to throw it up. Thank you so much, Jose, for being with us. This is, of course, where you can go for his Substack, or whatthechip.happened.com. You can see his tag there, Jose Navarro, at Jose Navarro on X. So be sure to follow this guy. He's brilliant. And Jose, we're going to have to interact a little more often here. But thank you so much for joining us. Any last thoughts for us since you're our guest, Jose? And then Nate, I'll let you send it out.
I was just going to say thank you guys for having me. I mean, this was fun. First time meeting Nate, and it was fun. He really is Nate the Great. Roy, we met last one, and it was fun. So you guys feel free to invite me. I can gladly spend, as we see, 2 hours plus talking about data centers and AI. So yeah, feel free to send an invite whenever.
Yeah, thanks for coming on, Zane. Appreciate everyone watching.
Close us out.
Yeah, appreciate everyone watching. We had really good CoreWeave and Nebius earnings. Looking for IREN the next couple of weeks, and we'll see you guys. We'll see you guys in a month. Thanks, everyone.
Later.